Is this thing on? Shout out to everybody here on the live. Haven't worn my black shirt in a long time, probably 2-3 months, honestly. Shout out to everybody here on the live. Let's put the lemon into the water and do what we do, man. Decalcify that pineal gland, get ourselves on another level. All about alkalinity to the mind, to the body, to the soul, baby. Let's go. Let's get hydrated. Let's do the right thing. I did not work out this morning. A very strange morning for me. Had a really rough night and woke up with my ear just pounding. Excuses, though. I should have banged it out, but I didn't wake up in time. Like, my mind was out. So anyway, God bless everybody here on the live. Thank you for being here. Ear infections aren't fun. Let's take a big sip of the lemon water. Let's stay hydrated. See, when I work out, I'm chugging that thing. I got more energy. You got to work out. Maybe I'm going to work out anyway after this, but like days I don't work out, I get like, it's like, you know, you got to go after it. Anyway, that's why I don't like the ear infection. It throws me out. But anyway, who cares? Shout out to everybody here on the live. You got to do what you got to do when you got to do it. Let's take a look at BTC like we do every single day. We're also going to take a look at the S&P, Bitcoin dominance, and a few other things here on the radar to see what's happening. This trend line is holding. Can Bitcoin get a bounce? So far, it's attempting to do so. We're going to break all this down for you and more on the show today. I have a couple coins I want to talk about at 11:15. If you stay towards the end, too, I have something else to talk about. All right. I've been here a while. Your hair looks great. Shout out to Quentin Davis. Thank you. I know what a golden cross is, and I think that's what it was on Jasmine. More aggressive trader today then. You never know. Lord, we thank you for such a glorious day you have given us. Thank you for filling my heart with such love for these people in the chat. Amen. Shout out to Sergeant Wiggles. Shout out to Members Only Trading. Shout out to Lifer Adam, Chris Citralella. Thank you so much for saying nice words again. And I appreciate you, Chris. Super kind you are, my man. And thank you for your prayers. And I decided to come in early today. You know, everyone says you come in late, but what when I come in early? What about when I come in early? All right. So anyway, shout out to everybody here on the live. Thank you for jumping on in. Strange 1 second here on intermission. I just want to see something. I don't know what's going on lately. We're having some glitches on the live. I do not know why. But I put this here twice already, and once you set something here, it should never disappear. Anyway, blessings to everybody here on the live. Shout out to my mom and dad, Jimmy and Irene, Daisy and Finn. They had a wonderful life together. God bless them both. On the vineyard, doing what they love, man. Doing what they love. Taking in that sun on those beautiful beaches. My mom and dad, right? So the 1 hour close below the 200. You know, that's a bearish sign for me. Suggests that we may start to go to the lower areas for BTC. You could also look at like me maybe bearishly retesting. That trend line was hardcore and we did lose it. If you want to be a little more, when I want to be a little tough on that trend line, we lost the trend line. Anyway, bearish times for Bitcoin. I see a move to the downside for BTC. I talked about it to my trading group this morning. You got an update. I said, hey, look at your smaller time frames. You know, you don't want to lose the 200 SMA. You're losing it a little bit here. Once you lost it on the 1 minute, you put a stop on the other side. You'd be in the money on the short right now. Simple as that. And someone say, hey, yeah, you could have said that. But I say it every single day. So after 5,000 times of hearing it, you have to be like, well, he was kind of right. You know what I mean? And last night I gave a trade right here. We were in the money. If you were traded with me till about 2, from about 10 till 2 in the morning, I made 200 some odd % gains. And I'll show you if you were in the trading group. Beautiful call. Actually, one of the bigger percentage gains I ever had. I think that's the update playing. Hold on 1 second here. What's going on? Yeah, all right. Well, look, and honestly, I usually get like 150, 60. Very rare I'm on 220% gains, but it was an awesome call. We had this little move here. Could we make a move above the 200 SMA? Next thing you know, we got the pump. It was pretty crazy. Here, where is it? There. We got a short squeeze, number 1, which was awesome. But this was it. I mean, I got in right here. I put my stop loss to break even, and we were gone. We were absolutely gone. How crazy is that? It was insanity. Up 226% gains, in at 57.5 and out around 59. I mean, unbelievable. What a beautiful move for BTC. So, and I basically gave the call again last night. So, in the night before, I gave you this call here for the big pump. Remember? And then we were like, I think I was wrong once yesterday and right 3 times. So, like, in the last 48 hours, we've been banging on it, and I'm showing you, forget about me. It's not about me. Everyone's like, you're talking about yourself. It's not about me. I'm the person that happens to be showing it. I don't know how else I cannot say it. It's about the strategy, and I'm teaching it to you every single day. I'm banging it into your head every single day. I'm showing you that I do the same thing every single day. I'm showing you what consistency is. I'm showing you what discipline is. I'm showing you what focus is. By doing and not just yapping about it, I'm showing you how to become successful, how to go after your dreams, how to be the person you want to be. These are all the things you got to do those things. If you want to change the position of the life that you're in, you got to change what you're doing and the way you're thinking. Your thought process must change. It's all about your mental process. You got to change the way you think about life. Literally, you have to think rich. You have to believe that you're meant to be one of the richest people in the world, and you're meant to give away a lot of your wealth to help others, right? Being super nice, tipping is awesome. Doing the right thing is awesome. Being able to pay extra for things for people that you know work harder than what they get paid for is amazing. Let's look at barbers, man. Barbers, like, you ever get a haircut and they're like $20, $30, and you're like, man, they just spent like 45 minutes detailing how I look. And they're gonna and if they did that 10 times a day, they make $400. If they do back to back, I don't know. I'm not saying it maybe not be, and then they're on their feet a lot. Anyway, I just feel like a lot of professions out there, people could get paid better, So anyway, can this daily break back to the upside? This is the falling wedge. That's what we're looking at. This is the market structure that we're looking at. Bro, you're killing it. Thanks for the help with the BTC trades. Our models make a great team. God bless you, Sammy. God bless Master Friend, man. Thanks for your help with the BTC trades, man. I said the same thing to you because, like, you showed me how to open up Tuesday nights, and then Tuesday night I see my signal, and then I go for it. And I love Tuesday nights. So, man, God bless you, bro. So you honor me, I honor you, man. And together, neither of us have to have an ego, right? And you could teach me to be open, free, and loving. And I appreciate that. And may God bless you and your family, man. Thank you. Yeah. Love is the strongest frequency in the game. If you live in love, you cannot be denied. Every single time you go back to love. All right? Every single time. Who's bullish on the haircut? Put a 444 if you're bullish on the haircut. 15-minute flag on total 3. 1 hour staying above the 200. Interesting. Master Friend and Sammy can't be beat. I tip $20 an hour for haircuts. Me and my boys, Billy Eatman. You're the man, dude. Lifer Adam. God bless you, man. Friends and lifers, hand in hand. Amen. 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 Okay, so moving forward, right? Can the weekly retest? And I'll delete everything again, but the weekly is starting a possible reversal. I showed you here, even we had a 4-week reversal here. It wasn't amazing, but at least we got it. We had a nice 4-week reversal here, or 6 week, 1, 2, 3, 4, 5, 6 week, when we had these two candles next to each other. These two candles. So it's a very bullish sign when you can get this green candle to close on the weekly, right? With the tweezer bottoms. If you flip this upside down, that would be tweezer top, right? So can we get the reversal for Bitcoin? Some signs of life here for BTC. And you can almost say previous support as resistance. We did kind of go wick almost to the wickage area. All right. And if you pull a Fibonacci from here, you came down to your 786, 886. If you pull it from here, you basically almost wicked to the golden pocket, but you're pretty close. And people would front run that idea. On the biggest asset in the world, where the rest of the assets are getting printed to zero, people would front run that. And people did front run it. So that makes sense to me when you're looking at BTC. All right, that it wouldn't come exactly to the target area because people would get in right. They would always set orders right above it, thinking everyone else would. And they won't get my orders, so everyone else will buy before me. So then everyone does. It's a self-fulfilling prophecy of front running. You understand? Yeah. Anyway, shout out to the farm, kids at the farm today, loving it. And so could this be the flag here? Back to the upside. Could this be the shoulder? The head and the right shoulder that can boom us up, Scotty, and break us back above 71,500, break us back above 62,963K. Really, those are our two big hurdles right there, because that's a rare two candles closed. Really, if you look left, a little bit here, but since then, these are the two big areas to watch. We break through there, it's likely we can gap right back up to 72,000. So see how 63 becomes 70,000. It's interesting when you're really into your support or resistance. The number before the number actually is the number, because once you hit that number, the probabilities become like 80 to 90% that you're going to get pushed over, you know. Ridiculous good games last night before bed. Amen to Mr. Sam Price Action and Master Friend. Bang, bang, bang. Hey, Sam, we have a 4-hour gain. How do you see this? Yeah, I couldn't believe it. It's 12:30 in the morning, and I'm like, how do I sleep now? I was like, hard to sleep here. I just opened up the trade like maybe a few minutes, like 10 minutes prior or something like that. 12 o'clock short squeeze, right on time. Don't ask me how I know. I hit every dang day. It's not easy at 70x leverage too, you know what I mean? Tuesday nights tend to be good to us. Once we see the weekly direction, you know, and I said this even before we got the bigger pump. 1 minute breaking the 200 is always welcomed when I'm in a long. You see, like I was feeding you guys all the sauce, even teaching you a little known fact about sunglasses. One day maybe we look rather cool with sunglasses, but what's not cool is inhibiting your pineal gland's full functioning properly. The pineal gland and its photoreactive requires specific wavelengths of sunlight in order to regulate the production of melatonin and serotonin in the brain. Sunglasses block out these beneficial light waves, which has harmful effects on the brain. Only use sunglasses when 100% necessary. All right? We don't fully understand the operation of the pineal gland, but from what we do know, you do not want to mess with it. All right? They also rob you of your energy by blocking the uptake of ultraviolet rays. This is one of the main reasons people get skin cancer, not because of sun, because of sunglasses. Interesting. And again, I'm not a doctor. You'd have to verify that on your own, but that's something interesting. Insanity. And again, I'm sure the sun can also hook you up if you stand in it all day long. But I was wondering about prescription glasses with UV blockers and stuff, or even contact lenses. That's true. I've been tracking the German wallets, and they're doing some crazy stuff. I know, right? Well, tell us. Sun gazing gave me so much energy and benefits back in the day, but these days I have very bad vision. Amen. Amen. He's funny. Sunglasses are 100% necessary for me. I mean, I can barely see without sunglasses on, right? We're not trading when Powell speaks. It's also, Powell is live right now again, something that you know, and he's getting grilled again. So it's just another one of those days, all right? It's like TLC out here, all right? Ask Mr. Joe DeBesenta about the pineal. He will tell you, yep. Nice haircut. Win Bella, thank you. God bless you. Thank you for the love. Shout out to everybody here on the live. Let's get the likes up to the watchers. I would greatly appreciate it. Thank you so much. Okay. And they're just going to grill him again. It's going to be a dog and pony show. Right? That's what they do. But fear does not exist. Remember that.
Our monetary policy actions are guided by our dual mandate to promote
he says this every time.
And stable people. The target range for the federal funds rate. Why? After tightened the stance of monetary policy significantly over this year and a half.
Sorry, this is connecting, which it shouldn't be.
We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much
streaming Instagram right now,
or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with
Why is
the
that tie
operational
almost the
independence
exact
that is
same as
needed
that
to
tie?
take
They
a
got
longer-term
almost-
perspective
Isn't that interesting?
in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Public mission,
Thank
well,
you,
you're
Chair
private.
Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you had questions about it yesterday, but I think we need further clarity. Your testimony
Is that a Bitcoin
about
tie?
Vice Chair Barr's discussions with the FDIC
that XRP?
and with the OCC on the next steps for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make, what happens then? Like, walk through the mechanics as you anticipated.
Okay. So we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that and then take some time to review those comments before finalizing the regulation. And that's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path to do that, but that's something that we think is the right way to do. That's what we've done in similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation, we think let's go out again and give all the commenters another chance to comment.
Yeah, and that also avoids serious lawsuit risk and the risk that Congress step in and overturn this rulemaking using the Congressional Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running against the independence of the Federal Reserve here. This is not a trifling matter of policy. This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period, so that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the 5-member board of the FDIC. You have to get agreement by the acting comptroller of the currency. These people should not have real standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing that the Fed has to go to an acting comptroller of the currency and a guy who's going to be out of a job very soon at the FDIC and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But the goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right. Yeah.
All right, so let's get into the question of balance sheet as quickly as we can. 2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. Where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress.
So crazy, right?
We think we have a good ways to go. And as I mentioned, and as you just mentioned, we've now slowed the pace really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand. And we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Not really, no.
You've heard about it?
I really don't focus on these things at all. I mean,
You don't focus, but you know there's something known as a Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
Just so you know, it is on Wikipedia, is a collection of conservative right-wing policy proposals from the Heritage Foundation to reshape the United States federal government and consolidate executive power should the Republican nominee win the election. The project asserts the entire executive branch is under direct control of the president under Article 2 of the U.S. Constitution. Unitary executive theory proposes reclassifying tens of thousands of federal civil workers as political appointees in order to replace them with loyalists more willing to enable the next, I don't know, it sounds pretty like a conspiracy theory. Wikipedia is very, one-sided. You know that, right? Anyway, but it also could be true, though. You know what I mean? I don't want to just it looks like it's here. I mean, it was established 3 years ago. Whether it says exactly what they're saying or not, but it does seem to exist.
We do serve a dual mandate, that's right.
And so
Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
what do you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that anyway, we certainly at the Fed do believe that the dual mandate has been a good thing. And it's enabled us to, it has not stopped us from controlling inflation when that was the thing that needed to be done.
And so while, of course, I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity and inclusion?
I
see
these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
You can see where she's
most
going.
Most of my career in the private sector, what I observed was really successful institutions in the United States, companies, organizations generally, are those that do.
We're sitting at 57,800, just flat. The whole market's just waiting, so just be careful.
And attract a broad, diverse
heavy volatility on
talents
days when he talks,
and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing, and we'll continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that our really good U.S. public companies do well.
Have you seen improvement during your tenure where diversity and inclusion has created opportunities
Man, she
for
got
more
$4.5
jobs
million
and helped
man.
to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career, a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data
She got that bread, bro.
about what was going on in the private sector. And what she discovered was that many of the CEOs and others welcomed the opportunity to learn more and to do better and to get assistance. And we saw improvement.
I like her veracity. I'll be
with
honest.
diversity and inclusion.
And for a lot
Have
of
you
people
seen
younger
that?
than her, she shows
There's
up.
no question.
You know what I
If
mean?
you talk
She
to
shows up.
CEOs, they get this.
She
If
puts
you
in
want
the
to
work.
attract the best talent in our country now,
I'm not saying I agree with everything. I'm just saying.
you need to be committed.
I like to
these
find
things.
positive things all the time.
And so I would like to compliment you on the job that you have been doing. I'd like to compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is now recognized.
She
for
wants to
5
be
minutes.
in power forever.
Thank the Chair. Chair Powell, thanks so much and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame.
I'm just telling you what they're going to do. I just want you to understand. They're going to start collapsing small banks, and they're going to consolidate it into a large banking system. I've been seeing this for years and talking about it for a long time. You're going to see this in the next year and a half. Many, many more smaller banks are going to collapse, and then they're going to funnel that into a bigger bank. They want this to happen in a way. This is another kind of weird, this is why the interest rate is where it is in a way.
The Supreme Court's
Puts
precedent,
pressure
I think,
on
makes
small
clear
banks to
that if
help
a rule
small
undergoes
business.
broad and material changes
Right.
from the proposal to final rule, the public must be given a meaningful opportunity to review and comment on those changes. You generally share that view, I think. Is that right?
Yes.
And I'm looking
Consolidation.
forward to seeing the results of the quantitative impact study and the separate comment period, as well as an interagency agreement you referenced yesterday. Because of Dodd-Frank's role and the vice chair for supervision, Vice Chairman Barr's role and the Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not? Or do you
No, see, the
view
1
it
minute lost to
strictly
200.
as a
Short was on.
collaborative basis? Just curious in your view on that.
I would say it's strictly collaborative, and I would say that our discussions with the FDIC, which Vice Chair Barr has actually been conducting, and the OCC, they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process issue.
Good. Well, let me turn from that
A
subject
resolution to the remaining process issue.
Court's recent decision to overturn the so-called Chevron doctrine. Many of us believe this was the first step to reining in decades, literally, of the
Overton window, baby.
Uncontrolled national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
100%.
I do. I think I tried to be clear that the
Can't keep
level of the
printing
U.S.
money.
debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
Yeah, for sure.
I think many of us certainly agree
why I buy
with that,
Bitcoin.
and we know that when the
100%,
deficit's at 3 times the economic growth rate and growing, it's of concern. And it's contributed to inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize it's not the case. This hearing
Everybody
sort of
knew
a
that.
can't-miss
I told you guys
opportunity
it was coming 10 years ago.
for the Fed to
So how is it
demonstrate some
transitory?
humility on the monetary policy decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to be more cautious about that change in policy?
So we were certainly mindful of a long period of time in which there have been very low interest rates, but also very low inflation, suggesting that the neutral interest rate must have fallen quite substantially. That was the standard view. The thing we didn't see coming was the pandemic. It's not like everything went off the rails. It's like we had this pandemic.
So easy
and it
to
really
use that,
changed the way
right? For the rest of your
economy's
life, they
working.
can
We had a
use
big
that
crisis.
forever
We
as
did
a
lot
way
of
to,
things.
oh, we botched
So the
it.
concerns that led us to those concerns
You can't
that
say
we were in a
anything.
world of very low interest rates all the time.
But now wouldn't you say we're in a very opposite situation?
And let's be
where-
honest, it wasn't the pandemic, it was the lockdowns that I don't think should ever have happened because, anyway, we can get into that. You get what I'm saying? It
because
wasn't
of
just the pandemic. It
reshoring
was
and
more about
tariffs and
the
other policies that are
draconian laws put on us during the pandemic.
quite inflationary.
Remind yourselves
well, I
of the
would say
facts.
this,
Whenever you get repeated. You know.
Those concerns are, right now we have the policy rate in the mid fives, right? And we see the policy is restrictive, but clearly interest rates, the neutral interest rate must have moved up, at least in the short term. So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look
is
forward
how
to
much
that.
of
Now
what
you
we did
go
in
back to the
the
chairman.
how much of what we did in that time period is relevant to the new world where rates appear to be higher.
The gentleman from Georgia,
said
Mr.
nothing.
Scott, is recognized for 5 minutes.
He said nothing.
Thank you, Chairman, and welcome, Chair Powell. It's great seeing you. Last time I saw you,
Scott likes to just hang out.
we had the gracious pleasure of you visiting with me in my office.
This is what he does with his 5 minutes.
And we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year.
Yeah,
Is that
52,000.
correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion.
Ooh.
Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide
This guy's on
you
point.
with, you may have heard this, but I want to share it with the nation because
You
you're
can get
vice
information from
chair
everybody. Never
bar.
Never put down another human being. Always believe they're built by God and there's something coming from there. Always. Never look to the negative side. Never use hate. Okay? Always use love when looking at anybody. There's something to be had of the moment of that situation. God is always showing you something. I'm telling you, people in the comments.
I made this statement, and I wanted to put this in the record, his exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do."
Oh, come on.
I thought that was a great statement of your record. Now, let
Still,
me ask you my
we're going to
question.
the downside
It's
here.
simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things. There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned and we've discussed, we're almost ready to put forward for further comment a revised proposal with material and broad changes to it. The stress tests are a different thing, and of course we realize we have to adapt those over time and be open to changes, and it has evolved significantly over time, but it's really a separate thing from the Basel III endgame.
Give us a little bit more information on the Basel III because I worked with you with this. Our work goes all the way back to the Obama administration when we responded to that crisis with our banks. And you and I worked that up where we came up with the hardest hit program to help those who were suffering with, those states that were suffering with high unemployment and at the same time high home foreclosures. And we were successful. And we've established that program, and it's still going on and helping many of our states. But, you know, I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year so that their lenders will not be at a disadvantage. Over in Canada, it's important to know that their banking regulators have also delayed for another year, imposing high capital rules on countries' banks at the risk of making them uncompetitive. And the Swiss National Bank is highly unlikely now to adopt a proposed 15% capital requirement.
I didn't lose any weight.
For UPS and others.
I was maybe 195 pounds. I'm
And the
185.
Bank of
10
England
pounds. I was
has
fat, man.
issued a near final proposal to increase UK
I just look.
bank
That's how I look. I got a
capital
good fresh
by
look.
3.2%.
I never looked fat in my life.
And I think this is all a measure of your great work and that of your vice chair. And I just wanted to comment on that, please.
Sure. So we're committed to finalizing this proposal. Our banks are going to live with these rules for a long, long time. The main thing is to get it right, and that's what we're doing. What we do in the end will be consistent with the Basel agreement, and it will also be consistent with what other comparable large jurisdictions are doing.
It's going to shut down
You're
small
doing a
banks
great
right
job.
there off the
Keep
bat.
up the good work.
It's going to shut down small banks. Small banks are going to have to, look, 10% increase in
Very
regional
much, Mr.
banks. They
Chairman.
can barely get ahead
Thank
by
you very
as it
much,
is.
Chairman Powell, and also thank you for continue to indicate that you will look at the entirety of the economy, the whole economy. We appreciate that. So one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations such as changes to capital requirements and lowering debit card interchange caps could lead to new fees associated with checking accounts and other increased costs for small businesses. This does come amid expiring tax provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel reproposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to repropose Basel III for comment period. Could you clarify if this means the proposal will be reproposed from scratch? And any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form would be. The sense of it would be, though, that we're making material changes and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming process.
Okay.
Writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, you know, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of running contrary to your two mandates?
Says right when this meeting ends, we're just going to
You're
fly to
asking
the
me
upside.
kind
That's
of a
what this
political
market says.
question, but I don't want to criticize a platform.
Don't worry, I'll get you there.
of
We're gonna
fiscal
find out what's
policies
going
that
on.
are not really ours to decide.
But this is important to the market. It will
Really,
sway.
it's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah, we have CPI data tomorrow too as well.
Chairman, is there any data to support the so-called greedflation? This term greedflation somehow has caused inflation. Is there any data to support those comments?
So we look at it that this inflation has been caused by a combination of, very strong demand and constrained supply. So it was really a high-speed collision between an economy that was reopening, and by the way, there was inflation all over the world at the same time, so these are some common factors. But at the same time, you had tremendous demand, for example, for automobiles. You had constrained supply because there weren't enough semiconductors, long story short. But, so that to us is what this inflation is all about. So we've observed, the sort of healing of the supply side at the same time restrictive monetary policies weighing on demand, and we've seen inflation coming down from
So
those.
there's no data that supports that gouging of consumers is part of the inflation?
It's been very hard to track a connection with,
Okay.
earnings and things.
Secretary Yellen mentioned that she didn't feel that there was grocery price shock and that sort of thing. Groceries and gasoline are the two driving problems for American families and certainly my constituents. Do you believe your policies are helping to alleviate in those two areas?
No,
So
they can't.
a lot of things affect, let's take energy first. The energy prices are generally set at the global level. We do have some effect on that.
Sorry,
but not that
Chairman, I've run
much.
out of time. Thank you. I yield back, Mr.
Sorry,
Chairman.
we can continue.
Great, thanks.
The gentleman from Missouri, Mr. Cleaver,
not
is
enough
now
time.
recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here. In some ways, I want to follow up or at least respond to the very civil but
Nice suit.
I think reason of why we need an independent central bank. And your response was, the question you raised would, if I answered it, it would be along some kind of a political avenue, and you didn't want to drive on that avenue. So I'm also very much concerned about a lot of the discussion. I've been on this committee a while, and so it comes up quite often. When the Federal Reserve was birthed around the turn of the century, I think around 1913, 1918, somewhere like that. Prior to the establishment of the central bank, was our country experiencing a lot of recessions because of
Dumpage.
no security? People felt no security, particularly the business community, in making big investments because nobody was in control. Just kind of think what went on just went on. Is that relevant?
Yes, I think the lack of a central bank between 1836 and the founding of the Fed was a period of lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle.
Not true. If you go watch the movie Money Masters, they were forcing us into an international monetary system. James Garfield said no, and he was producing it. Lincoln created the greenback. We knew we needed to make our own form of currency that we formed ourselves. They didn't like that in Europe. Whoever had created the monetary system for the last 2,000 years saw that we were going to escape, and they did not like that. What he's going to tell you right now is not true. What I'm going to tell you is the truth. I'm sorry to say, and that's the facts. And the facts is that we were circumvented by Alexander Hamilton through the Bank of England to make the first Bank of the United States, which put us into debt. We actually took 20% of our own money in debt. They took 80% ownership of the bank. Somehow we had to actually be in debt immediately. Like, it's weird. They used our money to actually bet on again. When I sit with you and explain how they used it, they ended up taking more ownership of the bank while we took the loan against it on them. It's so crazy, bro. You got to watch Money Masters. And then what happened is anytime that we tried to create an independent system, they would attack our way of life. They literally would send people into the streets to cause riots, to cause fights. And they would say, oh, your banking system will cause depression and pain. And then they would also control the newspapers, and they would write, bang, bang, bang. So look what he says. He's going to say, oh, it caused a lot of ups and downs and depressions, right? That's what the normal person's going to tell you, but that was orchestrated and created. Just listen, this is important here.
I think the lack of a central bank between...
If you're here with me right now, you're getting a really good education. It's more than just the chart some days. You really got to take everything in.
Lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle the very large seasonal swings, and there was no central bank to provide liquidity. So that's really what gave rise to the founding of the Fed in the early part of the last century.
Sure.
Do you think that that it is dangerous?
The monster on Jekyll Hyde.
Monetary policy and fiscal policy.
To blend them?
Yes.
So we try to keep them very separate, and we try not to express views on fiscal policy. That's for elected people who have undergone elections and won and make those very difficult decisions. We have a really specific, narrow, but important mandate that you've given us, and we try to stick to that. And so we take your policies as given, and then we conduct monetary policy with that.
I don't want to draw you into any kind of a political response.
But that's when you say that you are.
And I have not read all of this Project 2025 document. I read some of it online a couple of nights ago. But even whether it comes out of a 2025 or a 3089, whatever, one of the things that I'm concerned about, reading this from this document, that the document argues that the Federal Reserve is the inflation problem. And eliminating the Federal Reserve, imposing economic policy on the Fed that does not come from within the Fed. So I'm wondering here, would you agree
so they want to
with any of that I just stated, whether it came from me or Chairman McHenry or anybody else?
He's not going to answer that,
I'll just
bro.
say, first of all, we're certainly fair game for any criticism people have. I think what we've learned and what we know.
What a smart
is that
answer,
having
man.
an
He just taught me
independent
something.
central bank is
Smart dude.
is really essential. If you want to have high and volatile inflation, then the quickest road to that
Back to
would be to undermine the
57.7. We're
independence
just
of the
kind of
central
sitting
bank.
flat the whole
The
entire
Fed in our
time here.
case. So I
See, price
frankly
action
think
has been
that
between
view is
$100
very
the
widely
entire
held.
time we've been here
I
on the
find
live.
up here on Capitol Hill in both political parties.
So eliminating the Federal Reserve is best for promoting economic stability.
Yes.
Thank you.
I yield back.
I knew that our chair,
How is that not
ranking
5
member
minutes?
was going to come in and deal with the issue of housing. She always does, and we all appreciate the fact that she's obsessed with it, and I like that obsession. But I'm wondering as we try
Time's
to figure
up.
out how to deal with this issue.
It's been 30 minutes.
My time's
Of course it has.
Was that a question?
I didn't finish it, but yes. If you knew where I was going, please.
Gentleman's time's expired.
He's like, I couldn't say it, but if you know what I was
New
saying,
York, Mr. Barbarino. For
Thank
5
you, Chairman.
minutes.
Chair
they
Powell,
just
thank
cut
you
him
very much
off.
for being here
Yo,
today.
they just cut him off.
Based on some comments you made today and yesterday,
Oh my
Appears
gosh.
you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of those, the substance of
So
those
now we know what the
changes.
Basel Game
I know
3
you won't
proposal
get into
is.
specifics.
I'm going to
You said
explain
that.
to you what it is after this.
I just don't know how deep you won't get
I'm
into
going to give you a
them,
bunch
but,
of knowledge.
I just want to confirm.
You'll leave
what you
this
said to
stream
my,
with knowledge every
Colleague,
time.
Mr. Musi, there will be, you're not reproposing some things, it's just going to be a partial reproposal?
Dude, sounds
That's what
like
we're looking at doing, is major things that we've been working on. And there will be additional
Shout out to
changes
Justin,
that will
man.
be made that won't be reproposed. That's what we're working on, rather than a full, wide proposal.
So it's not a complete reproposal, just partial?
Yeah.
Can you get at least into, can you tell me which
partial
components?
repo.
You're,
You know, it's not, until it's all agreed and ready to go and vetted, I'm reluctant to try to get into too many specifics, just because, you know, when you're doing these things, nothing is agreed until everything's agreed.
no, I understand, I'm
Yeah.
not asking for what specifically your changes,
Yeah.
which, if you're willing to say which,
I hope to be able to come to
Okay.
you with a really clear answer on that soon. I mean, I think we're
understand.
ready to go at the Fed.
so that's my next question. So it's been said several times that you and many of your members of the board are at odds with your counterparts at the FDIC and OCC over how to proceed.
Sorry about
with
your
putting out a
generator,
revised
man.
Proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Grunberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say we're working through this issue together. And,
Someone's got to be holding it up.
well, you know, it's a discussion that we're having, and I think it's been constructive, and I think we'll try to keep it that way.
Can you at least answer whether or not the 5-member FDIC board needs to sign off, or can you just go to the chair?
No, I think it's the board, and of course, the comptroller is one person, but I think I mean, the FDIC can speak for themselves, but I
That
do
was
think their
weird.
board.
That was when his reptilian voice came out.
the question.
One final question, on timeline question before I move on. You mentioned yesterday that a reasonable prediction would be that Basel would not be finalized until the first quarter of 2025. Under this timeline, would it be safe to say that implementation would then not occur until at least the beginning of 2026?
Again, I can't be that specific, and, you know, someone asked me, does it sound like the first quarter of next year might be, and I said, it might be. I mean, there's a range of times it would take. The thing is, as I mentioned, U.S. banks are going to be living with these rules for many years. The point of it is to get it right, not to do it quickly.
You're never going to
We
get it
wanna
right.
get
It's been wrong
listen to
since
the
day one,
comments,
man.
Make sound decisions.
Well, about to lose
move
57-6. The
ahead in a
dump
way
continues.
That is, you know, gives us a sustainable set of rules.
Again, the
we
1
want to
minute
come back
200
and
just
fix all
can't
the
be beat.
mistakes in.
Can't be beat.
Thank you.
I'll
I
put
wanna
it up
move on
against
to,
anyone's strategy.
Another topic, long-term debt. You mentioned yesterday that you would most likely not move forward with other
Someone
rules
says I need to
until
be president.
people
Thank you.
reach a place
Appreciate
of
that.
understanding and acceptance of a
Let's
revised
get more of
Basel
that.
proposal. I hope that's the truth, as banks need to fully understand the implications of a Basel proposal before any action is taken on long-term debt. Finally, Chair Powell, I'd like to emphasize the need for the Fed to conduct a comprehensive, data-driven, and most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
No way.
I didn't catch the first part of that, the first part of your ask.
This is
Will
great.
you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity
On the
requirements?
liquidity thing, I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these
Sam
are
for
novel
president, I
ideas,
like
and we
it.
understand that.
I like
All right,
it.
as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that, because we had a mucked up process with Basel 2.0, and I don't think
333,
there's,
Sam Price,
we want to repeat
2028.
that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania, Mr. Music, because I know he had another question.
Oh, wow.
Uh, I thank my colleague. Chairman Powell, just back to what we were talking
Wow,
about.
he
the
bounced
price
it.
instability of groceries and gasoline, where we do have somewhat of an affordability crisis, has been termed. So would lowering rates in the near future be a pro-growth initiative, perhaps? Is that something that's being considered that would actually drive investment? and give a clearer picture for investment and perhaps help in these two categories.
This
and
guy's got
in the
like this
end,
gangster
increasing
slick
supply
look.
So as we lower those.
Like a New York gangster, you know?
Honestly, when we think about our near-term rate moves, we're thinking about a couple things. And the first of which is we want to be more confident about inflation.
My apologies, Chairman, I went over.
Sorry.
Chairman, I yield back. I yield back to my colleague.
The gentleman from California, Mr. Vargas, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Thank you again for this hearing, and the ranking member, thank you very much.
Thank you.
Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at your history when they were saying who nominated you when you got here and all that. In fact, you had public service even prior to that time.
Yeah.
right?
Every time you
That's
come
right.
here,
So
you
I thank you for your
kisses-
long public service.
Every
to the
time
nation.
you
I
come
think
here,
you're
you spend an
outstanding. I
hour
respect
telling how much you love him,
deeply
man.
here.
Just get to your stuff, bro.
You're pretty boring here today, to be frank.
Sorry?
You're pretty boring here, to be frank.
Thank you. That's a high compliment.
Yes, it is, because sometimes when you're here, there's all sorts of cameras here, and they're watching your every step and all. And I think there's a reason for that, right? And that's because the economy's doing all right. Am I wrong about that?
You know, take a look at our economy. We're growing at around 2%, it feels like. Inflation is down to 2.6%. Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but I don't see the media here to attest to that. In fact, it's just the opposite. Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says,
What is
New
this?
British government inherits worst economic plight since World War II. And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running their central bank, I bet you there'd be a whole bunch of media here beating you up to find out what the hell you're doing or what you aren't doing. And I think the reason for that, again, is I think the government here has done a pretty darn good job. One of the things you said you didn't see coming was the pandemic, right? I'm not putting words in your mouth.
Right.
In fact, I was here and I heard the parade.
So
of
weird when you
horribles. We were
berate,
gonna
when
have
you
a
like,
recession, maybe
even
a
when you like
depression.
someone, there's a classy way
In
to
fact,
make
the
it look like
country's
you
gonna
don't
fall
like them
apart,
all
did it?
that much. You know what I mean?
No. We went through a period of high inflation as the other countries did. And, that's very
And
challenging
in
for the
fact,
people.
isn't it the case that most of those countries had higher inflation than we did in Europe?
Don't, but 56.8 is next
Over
target.
time, there were times when their inflation was higher. I think
Yeah, it was.
overall it was broadly comparable.
Yeah, in fact, I brought it up a number of times here because there was a whole bunch of those countries that had much higher inflation than we did.
Well, Europe was much harder hit with the energy issues coming out of the Ukraine war than we were.
Sure. I mean, there's a whole bunch of other issues to instability. They had political instability and a whole bunch of other things, obviously. But, I mean, it is interesting today that, the parade of horribles that we hear doesn't seem to manifest itself with the media or the...
We're going to fast forward through that.
They see these risks. They do.
My time's up, but thank you again.
Thank
Appreciate
goodness.
Thank you.
Thank goodness.
The gentlelady from California, Mrs. Kim, is recognized
Bunch of
for
nothing.
5
Like,
minutes.
geez, like, do you represent
Chairman.
anybody? Like, you know what I mean? You got to
Chairman
stand for
Powell,
something when
thank
you're sitting in that
for
chair.
being
You
with
can't
us
just be
today.
blowing smoke.
Gosh, you're under a lot of pressure from all sides to divert from our monetary policy goals. And I commend you for your leadership and staying focused on the core missions of the Fed, which are price stability and maximum employment. So thanks again for your leadership. And you have stated that it is the Fed's strong view that you will have to reopen the Basel III Endgame proposal for comment again. And I really urge FDIC and OCC
Endgame proposal.
moving
So
forward
creepy. Like,
with
what is that all
reopening
about?
the comment.
I'm going to tell you what it is in a
period.
second, all right?
Chairman Powell, would broad support mean abandonment of any modified proposal
To me, it says that the smaller banks have to hold more capital, and it's going to crush them.
that garners mostly negative public comments in a public comment period for the modified proposal?
Sorry, I didn't follow your question.
Would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period?
What the
for
heck is...
modified
What?
proposal?
Broad support empirically would mean, a good solid vote on the Fed board. And I've tried not to be specific about what that means, but it also means broad support among the the broader community of commenters on all sides.
He's like, oh, she talked me, I'll talk
That's
her
what I
now.
meant by broad support.
Got it.
Yeah, that's what I meant by it.
Thank you. And as the Fed looks to enacting several changes to the proposal, I would also urge you not to overlook how the Basel Endgame proposal would disproportionately impact FBOs and regional banks and U.S. domestic jobs because of the way the outside operational risk is, weighted. So can we get your commitment to that?
So let me just say I'm not going to get into specifics. We're well aware of those concerns. We've obviously carefully digested all of the comments we've gotten from all different sectors, and those are concerns that we're well aware of.
Thank you. Let's switch gear to another matter. You have spoken for the need of transparency. Are there any conversations at the Fed to have more
leaking,
transparency and better engagement and consistency with stress tests?
So we have increased transparency in the stress tests over time, and I would say
Looked like Big One was going to do what it was going to do no matter what, man.
People wanna
I'm
write
usually into this idea.
articles and make comments that are critical of the stress tests.
not
We're gonna
saying
read
anything
those and we're
bullish
gonna
or
think about
bearish,
that.
you
We're
know.
open to improving it.
It's
We
gonna
know
really
that
lead us either
the stress
way.
test has to evolve over time if it's to remain relevant, and I think transparency is one of those subjects where we're prepared to listen and think about ideas.
Definitely. I would like to see more stress test regime that is more transparent and adapted, identifying unforeseen risks. So we can achieve that by being more collaborative, I believe, yes. So I'm also interested to hear from you whether you and your fellow banking regulators have considered the cumulative impact of any new liquidity standards with the Basel III framework and the existing post-crisis liquidity requirements. So what industry engagement has the board staff held with respect to changes to the liquidity framework?
So we haven't actually made any proposals on that yet. We have had significant industry interaction on the proposals, and we will move, I think, at some time this year.
What about the board staff? Have they conducted any
57,560.
industry-wide data collection to study the necessity for and
I think it's good right
the
now I'm calming you
impact of
guys
any
and
changes
showing you
to
that I'm
the
not trading
existing
right now.
liquidity framework?
Because if I was, I might be
a
forcing
lot
people
of,
into, so we're just
investigation
kind of
on
sitting
that
back,
front,
we're
but I think
watching what's going
this is
on.
the beginning of the process, not the end. We haven't published proposals yet. We're working on them, and it's a pretty early stage.
Thank you. Let me quickly talk about the inflation issue. We had a peak inflation rate of 9.1% in June 2022, and a lot has been talked about being a supply side issue and the demand shock from the opening economy. So can you elaborate how the expansion in the money supply and fiscal stimulus played a role in persistent inflation, and why is it so important to get to the 2% inflation rate goal right now?
So the inflation that arose here was a collision between very strong demand as the economy reopened. Remember that there had been fiscal transfers. We had rates very low. Those things were done because we thought we could be looking at a very, very bad economic time. As it turns out, the economy reopened and demand spiked very high. People had saved a lot of money because they couldn't spend. And so there was tremendous demand, and there was constrained supply. And what you got was inflation, and you got that everywhere in the world. That's what happened. So what's happened to bring inflation down, we've made quite a lot of progress on inflation. To bring inflation down, the Fed has been working on, with restrictive policy, on cooling demand. That has been working. And the supply side has been healing, and the negative labor participation shock has essentially reversed, adjusted for. So it's kind of working out as we had expected.
Thank you very much, Chairman.
The gentlewoman from Georgia, Mrs. Williams, is now recognized for 5 minutes.
Thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the president of the Federal Reserve Bank of Atlanta, Raphael Bostic has so rightly pointed out that combating economic inequality is a critical part of the Fed's dual mandate. When everyone in our community doesn't have the opportunity to contribute to their fullest potential, the economy is not firing on all cylinders. Nowhere is this more apparent than in my home city of Atlanta, which has more Black-owned businesses than any other city in the country, but is still among our nation's leaders in the racial wealth gap. I applaud you and your staff at the Federal Reserve for the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting 5th District as it does for those in the top 1%. This includes helping to make sure that financial services are affordable and accessible to everyone. As the Fed moves forward with the proposed changes to Regulation 2, I know that protecting access to affordable and accessible banking is at the top of your mind. That is why I was concerned when I started receiving outreach about the unintentional effects that Reg 2 proposed rule would have on marginalized communities, including my constituents in Atlanta.
I mean, at the end of the day, it's all about the Federal Reserve.
Specifically, I heard about the impact that the reduction in interchange fees proposed by this rule could have on bank-owned certified accounts in my district and across the country. The Bank-Owned Initiative is a partnership between financial institutions and trusted community-based organizations to offer low or no-cost bank accounts to unbanked and underbanked individuals. Access and affordability are at the heart of the changes that you're proposing, and I couldn't agree more with those goals. But we have to make sure that programs designed to serve unbanked and underbanked individuals in marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities. Chair Powell, how does the Fed take into account how regulations impact constituents who don't have an attorney or an interest group to submit a comment on their behalf?
Well, let me say first, we have heard those concerns that you raised and others have raised about aspects of the proposed
At the
rule.
57.7.
And
Nice little bounce
we
there.
very much understand the concerns that are being raised. In terms of people where we don't have comment letters, we try to be thoughtful about the impact of our regulations, but principally we're looking for public comment on things.
Thank you. The FDIC's most recent data shows that the rate of unbanked households is at an all-time low. The Bank-Owned Initiative has certainly played an important role in this progress. Bank-owned certified accounts are available to more than 95% of low and moderate income households across all 50 states. Access to low or no-cost banking services is a door to financial inclusion and wealth generation for marginalized families. As written, Reg 2 could undo some of the enormous progress made in the past several years. Chair Powell, how can regulators work with members of this committee to ensure that future proposed rules do not hinder Americans' access to tools that enhance the Federal Reserve's financial inclusion efforts?
So we're very focused on things like bank-owned, as you pointed out.
Tomorrow, 8:30 in the morning, month-over-month, year-over-year, core CPI, consumer price index.
Communities, so we wouldn't want to do anything to weigh on that. We were happy to work with you in your office on those issues. But as I mentioned,
Billy Goat Tales live on Amazon.
Reading them,
Get that right now.
We're taking those into account as
I'll
we
send
think
that link
about
out.
appropriate changes to the proposal.
So we will definitely follow up on that, because as we're writing these regulations, I want to make sure that we're thinking about the real world impact and
That's
what
the
it
link to
means
Billy
to
Goat Tales
consumers
live on
when they're
Instagram. Check
accessing
that
financial
out
institutions.
for your kids.
I look forward to working with you to further the Fed's financial inclusion efforts. Like earlier this week, I sent you another bipartisan letter related to the Federal Reserve's April proposal to extend the operating hours of FedWire Fund service to 22 hours per day, 7 days per week, and every day of the year. That was news that I was eager to hear. This may sound like a small technical change, but it can have a big impact on our constituents, especially for those living in marginalized communities who live paycheck to paycheck. Growing up in the booming metropolis of Smith Station, Alabama, probably never heard of it, Chair Powell. But there are limited options for loans and short-term loans. In an area where everyone needs a car to get to work and they have to work to eat, when money is short, any delay in accessing a paycheck or paying a bill can disrupt your entire household. Extending operating hours for FedWire Fund service and National Settlement Service will allow people continual access to their funds outside of what we've deemed normal operating hours. And I hear the gavel. I'm out of time, but we will be following up for more conversation. Thank you.
Thank you.
She didn't ask for anything. She didn't ask me. She just said whatever she wanted to say. It's interesting.
Thank you,
The point
Mr.
is to
Chairman.
interrogate for the constituent.
Chairman Powell, after a year with very high inflation that battered American paychecks, inflation rates have moderated some.
Mr.
However,
Floody.
inflation continues to linger above
Pink
the 2% target rate set by the Federal Reserve. In fact, the PCE inflation index has remained above 2% for the last 3 years. The Federal Open Market Committee's statement on longer-run goals and monetary
Back to
policy
57.8,
strategy
right where we
issued
started
at the
the
beginning
stream.
of the year stated,
So I
and
just
I
did a little
quote,
liquidity grab
"The
to
committee seeks to
57.5.
achieve inflation that averages 2% over time, and therefore judges that following
15
periods
minute
when
looks like it's
inflation
making
has
a
been
bounce.
running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately
1 hour
above
looks
2%
like it could
for some
bounce
time."
back above
end
the
quote.
200.
Chairman Powell,
We could front run
does
that.
the commitment to
We
achieve
could
a
front run this
2%
cross. We
average
could wait for
over
this to cross.
time
Once this
apply
crosses, we
in
can
the
get the
other
pump.
direction as well? Meaning that if inflation remains above 2% for a protracted period, would the committee
One
instead
trade
aim
and
for
one trade
inflation
only.
moderately below 2% for some
This trade
time
right
in order
here.
to achieve an inflation average of 2%?
No, it doesn't.
Confirmation with the 1 minute
Is
break
it fair
would
to
give us
say
the
that
move.
you would need to see the PCE index dip below 2% at least once in the coming months in order to contemplate a rate cut?
No, that's not fair to say. We've said
Excellent.
that
I like-
you
that's
don't
bullish.
wanna
What he
wait
just
until
said is bullish.
Inflation gets all the way
You
down
get
to
it?
2%.
I like
because
this.
inflation has a
This is
certain
bullish
momentum.
talk right now.
You
Give us a
wouldn't wait
pump.
that long. If you waited that long,
You hear what
you'd
he's
probably
saying?
waited too long because inflation will be
When you hear him say
moving
way too
downward,
long,
will
that's
go
rate
well
cut.
below 2%.
That's
which we
bullish
don't want.
talk.
What combination factors would you need to see in order to support?
I
a
like
rate
this guy's
cut
questions
this
because they
month or in
pinpoint an
September?
answer. Like,
So I'm, once again, I'll say I'm not sending any signals on any particular date of any meeting whatsoever on policy. I said that yesterday, and I'm saying it again today, but I will answer your
260
question.
for 1,300.
What we said is that we want to be more
That's a good one.
confident. We want to have greater confidence, and that means
But I'll wait for
more
confirmation
good
of that 1
inflation
minute
readings.
to break
that
the 200.
inflation is moving sustainably down to 2%. Greater confidence that that is the case. But remember, we have a
We
dual
got liquidity
mandate,
up to
too.
that
We're not
area of
just an inflation
58.8,
targeting
exactly
central
where I
bank.
wanna go,
We also have an
58.
employment mandate. So I could also see us cutting, and we've said this, I've said this.
Go all the way to
If we saw
62,000.
unexpected weakening in the labor market, and we do now see, I'll say, speak for
Nice
myself.
gap in the
I now
VRVP,
see
take profit right there,
the
58
risks to
forward.
the two mandates as much closer to being in balance. I think for a long time, we've had to focus heavily
1
on
minute
the
comes back to
inflation
the
mandate, but I think
21.
now
Can it get the
we're
breakout
getting
of
to
the
place
flag?
where-
Once it
where,
breaks the 200, I would
your-
look for
your-
confirmation,
the,
and I would
labor
saddle
market
into the
is getting
15
pretty
minute.
much
I would
in
use the
balance to
1
where it
minute
needs to be.
for that confirmation
And
to
so we're
adjust
looking at
myself
both
into the
sides.
15.
I know that the media and others have continued to talk about the prospect of political interference with the Federal Reserve. With an election coming up, I know you are very aware of the heightened scrutiny awaiting the Open Market Committee meetings in July and September. Can you use this opportunity to speak regarding the Federal Reserve's political independence going into this election?
Sure, I'd be glad to. So, our political independence is critical to our ability to do our jobs and to sustain the faith of people across the political spectrum. And it comes down to we make our decisions based on economic data, the evolving outlook, the balance of risks, and we don't take into consideration any other factors, including political factors. We have a long history of doing that, and I think the public believes we will do that. Any decision that we make to
57.8. We've been flat, basically, except for that little dip to
any of our
57.5.
policy tools, it's going to be very well grounded.
Just
in the
explain to you
data,
exactly
and
how I
will
would trade it.
represent our best
Not really
thinking
more you need.
about what is best for the American public in the near and medium term, and that's the promise that I will give and that all my colleagues will give. And that means that we're not looking at things like election cycles. We're not looking at any of those things. We're looking at the data. What does it tell us is the right thing to do? When we figure that out, when we think it's time to move, we go ahead and move, but not until then.
Appreciate that. Finally, I'd like to raise concerns with housing costs. While shelter is one component of the broader PCE calculation, housing often makes up one of the largest, if not the largest, expense for many consumers. Inflation for housing remains persistently high. One of the characteristics of this economy is that consumer sentiment is remarkably low. Do you think high housing costs could be contributing to the persistently low consumer
Shout out to Billy, man.
sentiment?
Thank you, Billy.
I think high prices generally, I think nobody really can be super highly confident of their answer on this, but I do think it's the fact that while inflation has come down, prices are high, if you know what I mean, and people are
Because when
paying
you
more
keep
for
printing
things,
money,
more
the
for
cost, it
housing,
has to
more
go
for
up.
the essentials of life, food, energy, and that to me is how I would explain surveys. We say that the economy's growing, inflation's come down, unemployment's low, and all that's true, but prices are high.
Thank you, Chairman Powell, for your answer and your testimony, and I yield back.
Gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you. Chair Powell, the Fed has an inflation rate target of 2%. Are you waiting for both PCE inflation and CPI inflation to fall to 2%, or only one of those metrics?
So we look at different measures, but for a quarter of a century, the PCE inflation has been the Fed's goal. We've defined our goal in terms of that because we think it's the better
Almost a shoulder, a head
measure
on the right
of
shoulder
of
there.
the costs and inflation that the public actually faces.
You break
And
that.
you've
boom.
said that you're willing to cut interest rates before reaching the 2% target. Is the decision to cut interest rates going to be driven by reaching a particular target en route to 2%, or is it driven by the overall trajectory of the inflation rate?
It's going to be driven by the totality of the data. There isn't a particular number that we have in mind that we have to get to. It's more, you look at all of the data, and the question we're asking ourselves is, are we sufficiently confident that inflation really is moving down toward 2%? So what's the underlying inflation rate, looking through the volatility? We're also looking, though, as I mentioned, at the labor market, and we're asking ourselves, we have to take into account now maximum employment, that mandate. So we're looking at both of those in the decisions that we make.
I mean, are you confident that the inflation rate is on a downward trajectory?
I do have some confidence of that. I think we've seen that over the past several years. The question is, are we sufficiently confident that it is moving sustainably down to 2%? And I'm not prepared to say that yet.
Chair Powell, you announced a reproposal of Basel III rather than a mere revision. Do you believe
I
that
don't
the
see
U.S.
much happening
banking
after this
system
liquidity
is
grab. We got
sufficiently
liquidity to the
capitalized in
upside.
absence
Anything
of
can
Basel
happen
III?
here, but we stay above the 200 SMA. I'll take it because I don't have to
long
lose a
been of the
lot to
view
take
that
this trade.
that U.S.
See?
banks are well capitalized, and at the level of
See
capital
what happens.
in
I'll
the
trade the
US
flag
banking
in
system is
resistance,
about right.
support into resistance,
So if
200
the
SMA. If we
banking
lose that,
system
we're
is
done.
sufficiently
I did
capitalized
front
in the
run
absence of Basel III,
my 1 minute
what
signal.
exactly
We
is the
could
need
get
for
easily
Basel III?
rejected, and I'll lose it. So
First of all,
we might
there's-
make a flag here,
there's no
considering how the
precise
21
answer
and the
as to the
200 are
appropriate
for
level of capital. I think we've been part of developing the Basel standards. They create international broad parity. It's important that we have that. It's important that we do something that is comparable to
And they
what
ended
the other
11:30 last time,
large
probably gonna end now
jurisdictions are
again.
doing, and that it's consistent with Basel. And I think that's what our banks want. That's what we want, and that will be best serving the public.
But you agree we should conform without gold plating?
Some things we
don't know if you'll see
gold-plated,
this, but thank you for being
and some
family
things we
friendly. I
haven't,
can stream a
and,
working. God bless you.
but
Thank you.
I think we should make. I think our end game proposal should be at the end should be consistent with the requirements of Basel and consistent with what the other large jurisdictions are doing.
Are you confident that there's no legal conflict between
Thank you,
standardization
Boba Kush.
recommended by Basel III and the regulatory tailoring mandated by Congress?
I think we can work through all that. Yeah.
Okay. But if there were a conflict,
Basel doesn't impose any requirements on anyone. There's no enforceable requirements. Every jurisdiction
Shout out to Win
does
Bella.
what it's going to do. Basel doesn't bind anybody.
right, but the regulatory framework you're adopting would codify those recommendations.
Yes.
Which would have the force of law, right?
Yes, that's right.
And so if there were a conflict between the codified recommendations and an act of Congress, would you agree that an act of Congress would supersede those
Yes.
recommendations?
Sure.
Does the loss of Chevron deference have any implications for Basel III?
It's very early days to assess. There's several decisions that are about administrative law. and I think
57-8, it's a
too early
battle
for us
zone
to
right
say.
now.
I
We
mean,
get back above
ultimately
it, we
the
pump.
question
We get
is,
rejected. It's
are
a
the
zone.
actions we're taking in compliance with the law.
Thank you.
And that decision says that there will be a less deference or no deference maybe to the opinions of the agency, but that just means a court will be answering the same question, which is, are those actions consistent with the law?
The Fed has a target rate when it comes to inflation. Does the Fed have a target when it comes to quantitative tightening, like when it comes to what should be the size of the Fed's balance sheet?
Well, we don't have a specific target, no.
What would you consider to be a healthy size for the Fed's balance
We
sheet?
define it.
Depends on what happens.
With not with
much
numbers,
money
but
they
with
print,
words.
these
And,
freaking
we
people.
want an ample reserves regime with a buffer, so that reserves are not scarce. And we think plentiful reserves, ample reserves is the right place to be. And we'll find that empirically.
Can you put a number on that?
No, I can't really.
For 4 decades, we've had the best of both worlds, low unemployment and low inflation. Can the U.S. economy return to the golden age of low unemployment and low inflation, or are we doomed to live with a new normal of higher interest rates?
Well, I think we have low inflation. We've got a period here of very low,
come on.
of low unemployment.
We have high inflation, so can we have the best of both worlds?
We certainly can, and that's the plan. Okay. We're going to return to 2% inflation. I'm reasonably confident. Some people argue that we're entering into a world of a lot of upward inflation shocks. That would be
Florida's
a challenging
awesome, man.
world,
I
but,
wish I
that
lived in
remains
Florida
to
too
be
till I moved here.
Thank you.
Now I don't wish I lived in Florida anymore. I live here.
Iowa. Mr. Nunn is recognized for 5 minutes.
Florida's where people
Thank you,
come
Mr.
to
Chair.
really want to
And
live their
thank you,
lives,
Chairman
man, and
Powell, for
relax.
being with us today. Your office has done a
Stop all that
very
nonsense.
diligent job in working with this body on both sides of the aisle. I chalk some of that up to the fact that you've got some very good folks from Iowa on your staff there, helping keep the trains running on time, so that's excellent. I will note that, in Iowa, the average family has experienced, annual inflation of about $925 per month just in the last 3 years. I've got 6 kids. We're the #1 egg-producing state in the country, but yet eggs for each one of my kids goes up 40% this past year, and take that times 6. I'm no economist, but that adds up real quick, and I think I'm reflective of a lot of families across the country right now. So, Mr. Chair, one of the things I'd like to talk about is what we are focused on and what your department's working on at the Fed. The U.S. Federal Reserve, in my opinion, should be more focused on folks like my hometown of Bondurant, Iowa, versus what's coming out of unelected bureaucrats in Brussels, Belgium, for example, which is one of the reasons I'm so grateful that you have talked about
Let's see, we get to
reopening
9,
Basel
I'll win
III
this
for a
trade.
conversation on what's
Just
in the
need to
best
get to like
interest of the American
58,
people. I applaud you and your
quick
team
little
for
move
this.
here.
While I would like to see Basel III candidly scrapped altogether, I think that there are 3 things in this proposal that we've got to look at immediately. One, the impact of credit availability.
Wow, 57.8 at the
especially
beginning of
to
the stream,
ensure
all the way
that
here. We
it
did
won't
one
be
dip, but
tighter
we're back
credit
at it.
conditions on small businesses back home in places like Iowa. The ability for farmers across the country to be able to hedge their grain, corn, soybean, livestock in a new Basel III conversation, and ultimately eliminate the downstream effects on American banks being held to higher standards, very clear in Basel III, than what's being held in Europe. So with that, I want to read
How can that person sit there and not move their hand for that long?
The letter I sent in a bipartisan way with
Crazy.
Senator Jerry Moran,
That looks like a
specifically
picture.
emphasizing the negative impact of increased bank capital
She's gotta move her
requirements
hand at one
on the
point.
economy, our constituents,
How can you keep your hand like
and
that
ultimately
forever?
our ag producers across the country. So what I'll first say is, can you confirm that the next Basel III proposal, as outlined, will address concerns from our ag growers, including our farmers?
Let me just say that we're well aware of the concerns you're raising about hedging, and
Don't hedge.
I'm not going to be too specific about things, but we're quite aware of those concerns.
I certainly hope your team gets the opportunity to hear that, because it's one of the most
It's
painful
his
things
mic.
I'm hearing
Something
back in
he's
my
got
home
on him.
district. Would you agree that the end user's concerns
That ring.
could have been mitigated maybe at the front end of this if, Congress or, say, a farmer in my district had been included in those opening conversations?
57.780 again. I'm struggling. 1 minute going to make that
in-
flag
in
first before we get to
hindsight,
move.
Perhaps that's right. But in any case, this is what the comment period is for.
Well, I'll note that 84% of the comments coming from this proposal concern entities outside of banks, as you know. A lot of those were from the ag industry who felt that they had no voice in this and were a recipient of things that
Yeah,
really
soy
harmed
is
their
horrible
businesses.
for you, man.
With that, I want to read quickly, former Treasury Secretary Larry Summers was asked about Basel, and he said, quote, "We're going to need to prepare for consolidation in banking in the future, quite possibly some even further evolution of lending away from banks." Now, I'm going to note here that Iowa has over 250 community
Getting
banks
the pump.
with assets under $7
860,
billion.
840.
His commitment, or
A
his
little bit of a
comments were
short
great
squeeze.
concern
Sammy
on
may
this
be in the money
consolidation.
soon
Do
here.
you
If we
share
get this pump here to the
concerns
red
about
liquidity
the
zone at
consolidation
58,290.
amongst banks across America?
Let's go. That's the
we all-
closest place.
I speak for myself. I realize that community banks are tremendously important in their communities.
But you're going to bury them when you do
And it's
consolidation.
not a better world when community banks go out of business.
But that's what's
at the
going to
same
happen with
time,
Basel III. You can see it.
If there needs to be consolidation, I don't think we should be standing in the way of that. But we shouldn't. We don't want to be part of the reason why community banks.
But you are, though.
Going
That's
out
exactly
of business
what
or
you
being
are.
forced to merge because of, for
That's
example,
exactly what you're doing.
high fixed costs because of regulation or other things.
I would agree with you, Mr. Chairman. We don't want to be the.
I got the
instigator
steroid
for
airdrops. They don't do a dang thing, man.
and stop serving a local community.
I got them right here.
As we look at Basel III, if
The
it's finalized
neomycin
in early
and the
2025, does that
polymyxin
mean we will push implementation back
and
to
sulfates
2026?
and hydrocortisone.
I don't know exactly what it would be, but that's something like that is right. We'd have a
Caustic
typical
solution.
phase-in process at the end of the quite a lot of
It
work
is what
to
it
do to
is,
get
man.
to a final rule, and then there'll be a phase-in process. I don't know exactly what the date would be.
Thank you, Mr. Chairman. I just want to know kind of a timeline for my folks. I mean, there's obviously 2026, or take my advice, scrap it all together and we can start over, if we even need to do that. Let me ask very
Yeah,
quickly.
he said they
with
don't
Chevron
want to stand in the
overturned,
way of consolidation. Exactly. He said, or stand in the way. They're going to
is there
consolidate.
anything your,
He did just
the
acknowledge it,
Fed is
100%.
doing to identify areas where
100%.
maybe we have over-regulated at the federal side and you're
57,
self-policing
8.
right now?
Under the
Flat.
Chevron decision? I mean, again, our view is we're very focused on obeying the law and reading the actual words of the law and interpreting it according to the words that are in the law. This is the way we approach things, and I'm not sure how much will change. Basically, a court will be doing that with a little bit less deference to the agency, but we think we're already interpreting the law pretty carefully. So, and again, these are brand new decisions. There are several of them, and it's way early. We're just studying them now.
Thank you, Chairman Powell. Thank you, Chair, and I hope you continue to self-police. It's much
Yeah, I
appreciated
need to
you
see.
and
You
your
need to
now
go to an
recognize
ear
the gentleman
specialist, and
from
they
North
remove
Carolina,
the
my
fungus
friend, Mr.
inside,
Nickel,
and you will
for
have
5
immediate
minutes.
relief. I definitely do.
Thank you so much, Mr. Chairman. Welcome back, Chair Powell. I represent a Republican-leaning, very purple district, so my constituents sent me here to get things done. It's been disappointing that we're on track for what I believe could be the least productive Congress in our nation's history. But this committee has done some good bipartisan work on the digital assets market structure bill and stablecoins. It's a place where I have hope that
here he
we're
is.
going to see some action in this Congress.
Mr. Nickel.
I know you and I have privately spoken about stablecoins, and here in the House, in a bipartisan way, we've been working diligently to pass a bill to regulate payment stablecoins. This committee voted in favor of the legislation in a bipartisan way last year, and there have been numerous calls from this committee to you and to the Fed asking that you prioritize working with Congress to help push this legislation forward. We've enjoyed our conversations with staff as well. Can you commit to directing your staff to finalize and support passage of stablecoin legislation this year?
So we've been, really pleased to take part in this process, and very much appreciate being included in it, and we'll stay with it. We think it's really important that we have a federal framework for stablecoins, and again, we'll be all in on working with you to get that done.
Thank you very much. Big issue for the folks that I represent, housing. Housing, the rising cost of housing hits my constituents especially hard in North Carolina. Our ranking member, Maxine Waters, has made this a big priority for the work that we do in the committee. In North Carolina, we've got 343,000 households that spend over half of their monthly income on rent, leaving
a little short squeeze here,
money
860
for
flashing.
Other expenses like healthcare, transportation.
I opened up the long, the best I could do for you
Access
here
to safe and affordable
on the
housing
lot.
is essential to the well-being of working families and individuals in North Carolina and around the country. Chair Powell, despite the strong economic trends you mentioned in your testimony, housing prices and median rents have increased by nearly 50 and 41% respectively since May of 2020, and they continue to rise. In fact, housing costs continue to outpace modest wage gains. High interest rates continue to add to those costs.
A bunch of orders
For
just came in
example,
all the way to
high interest rates make it
57,560.
more
You see that? And a big
expensive for
red
home builders
volume.
to finance new housing. High interest rates also cause landlords to change higher rents and lead to higher mortgage costs for would-be home buyers. I know that you and your colleagues at the Fed are correctly focused on bringing down inflation.
Look, that was like a flash in the pan. Now it's gone.
But have you considered that at this point, with housing costs,
Now we got them up here. They
increases being
flipped
the
it
primary
back up
driver
here.
of
You see, they
inflation,
moved this liquidity here,
keeping
back
interest
here.
rates high only towards.
You're looking at
stated goals?
58,000.
So a couple things are happening with housing. Before the pandemic, there was pretty serious housing shortage, and we can't do anything about that. Then the pandemic comes along, and
If this
we really
breaks to
think the
200,
best
we're
thing,
gone,
most
baby,
important
gone.
thing we
This
can
is what
do
you're looking
for the
for.
housing market in the medium and longer term
me
is to get
you're
inflation
looking
under control,
for.
so that interest rates can come down,
And then
so that
Sammy
we
wins
can
again.
get back to a more normal interest rate. No one knows exactly where interest rates will go, but they'll be
Flat
lower
right
than they
now.
are now.
Bang, we
The
need
housing
that.
market,
See the
supply and
tightness from the
demand
21 to
will work their
200?
way
That's like a
out,
Bollinger
and
Band
you'll
type of
have-
vibe.
You'll have supply of housing. There's still going to be a housing shortage at the end of that, though, and it's true that our policies work through interest-sensitive spending. Housing is maybe the most interest-sensitive form of spending, buying houses with a mortgage. We know that we have really significant effects in that market, and it's tough on people, but this is the path to getting inflation down, which will bear fruit for many, many years.
Thanks so much. I don't think I'm going to be able to get in my next question in the limited time I have, but I wanted to give you this opportunity if you'd like it. I've talked to you privately about this and have a pretty good idea what you'll say. But if you would like to say that the economy is heading for a soft landing, you're welcome to say soft landing as much as you'd like right now.
I'll say, for some time, I've thought there is a path to getting back to full price stability while keeping the unemployment rate low. There is that path. We've been on it. We're very, very focused on staying on that path. I would say we're at a place now where the risks to the two mandates are much more in balance than they were, and that means it's not just about getting inflation down. The job is not done on inflation. We have more work to do there, but at the same time, we need to be mindful of where the labor market is. And we have seen considerable softening in the labor market. We still have a strong labor market with low unemployment, by all means. So this is what we are very focused on continuing to work toward.
Thank you very much, and I yield
Thank you.
back.
The gentlewoman from Texas, Ms. De La Cruz, is now recognized.
I'm not done yet.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being here today. I appreciate that. I represent a working class in South Texas. In fact, my district is mostly Hispanic, one of the most Hispanic districts in the entire nation, over 80%. And my district is also a rural community. So the topic today greatly affects my constituents and is something personal for me. That being said, the population that I represent is a population that the Federal Reserve research has shown
sideways
disproportionately will be the hardest hit in inflation. That being said, higher prices due to Biden's induced inflation is something not only the nation is feeling, but my constituents are feeling. They're feeling it at the grocery store. They're feeling it at the gas pump. Small businesses are feeling this. And we know that cutting back on their spending, people who are living paycheck to paycheck, they still can't get away from these increasing costs at the grocery store or the gas station.
It's inflation, man.
So
it's going to
even
never
small
stop. Don't you get it?
changes have a
Go look in the
big
last 40
impact
years.
in
It's just
rural
going to continue.
communities like mine. In fact, the Farm Bureau recently said that the cost of the 4th of July prices, the 4th of July celebration had high increases. The headline reads, record high 4th of July cookout costs, inflation hits the backyard. This report says that costs were up 5% from last year and up 30% from just a few years ago, all during the Biden administration time. Now, the Biden administration wants us to simply forget about the last 3 years and the pain it has
Hispanics
caused
really want to vote Trump.
families
I think that's
in
what you
my
get from
district.
this.
They
I
don't
could be
understand
wrong, but
why
that's what
people
I
are
hear a lot more
unhappy
Hispanic
about
people
their
saying they want to
current
vote Republican than
economic
I've ever heard in my
situation.
life.
And quite frankly,
Think they're fed up.
it is angering and it's simply out of touch with the everyday American. It seems obvious that until we grapple with the runaway government spending, that unfortunately we are going to continue
100%.
to have runaway inflation.
100%.
Chairman Powell, can you explain to us
But you
how the
yourself
excessive government spending
don't
not only
understand the
increases
Federal
the
Reserve.
national debt, but also
even she's on the right track, but she
affects
doesn't still,
inflation as well?
Sure. So let me say, first of all, we completely understand that inflation hurts people, low and moderate income people, directly and immediately in a way that it doesn't affect even middle class people, because paying more for the necessities of life when you don't have much of a financial safety net, the pain starts right away. We get that, and so it is for those people, among others, that we are doing everything we can to get inflation under control and stay at the job until it's done. In terms of the causes of inflation, the inflation that we're having is not that different from what other advanced economies around the world are having, and it really results from the pandemic comes along. Inflation is low. The pandemic comes along. We shut down the economy. They're sent checks to replace their income. They can't spend that money because they can't go to the movie theater or to a football game because everything is closed. So savings go up, and so people are spending a lot. Meanwhile,
Chair Powell, I have only a minute left, so I yield my time back. I want to shift gears real quickly.
We got the pump,
I continue
everybody.
to believe that the federal banking
got the pump.
agencies, including the Fed,
Sammy's in the
should
money again.
scrap the
Little bit.
flawed
Only 10%,
Basel
but we
III
got a
endgame
nice pump,
proposal
man.
and start over. At this point, the last
I showed
thing
you how we
a
do it,
first-time
and now we've
homebuyer,
broken
a
the
small
1 hour,
business
the 1
owner,
minute. That can
and,
propel us further to the upside.
Constituents, as
I look
you
for the
said,
1 hour to
low-income
get back above the
people who
200. And then
are
bang, I
rural
front runner
people.
this
For
reversal.
example, in my community,
it was high
the
risk,
last
and
thing they
I'm
need
still
is
not out the
harder
water yet,
access
but it's
to capital,
starting to
which
begin
is
pretty nicely.
exactly
Now, if we
what
get to
that
my target, I'm
proposal
making a nice
does.
$800
The
in the day.
public knows it and doesn't want it either, with a whopping 97% of public comments being negative.
We got a short
for
squeeze
this
like I do every
proposal.
day here on the
Chair
channel.
Powell,
It took us
don't
all day,
you
but we
agree
got
that
it.
with the
We got my short
overwhelming
squeeze, baby. We
negative
did it.
reception of this
We did it.
proposal, that it shows a lack of public support?
I do think that's fair to say.
Thank you. I yield back.
The gentlewoman from Colorado, Ms. Pedersen.
Wow, that was all. After all that, he said 3 words.
Thank you, Mr.
Or 5
Chairman.
words.
And
I do think that
thank you
is
for your
fair to say.
service
6
in
words,
such
7 words.
difficult times. We sign up to serve and we don't know what's going to come our way. And when I think about what we've been through as a country with a global pandemic, the economy in collapse, and what this Congress was able to do to infuse money to keep our small businesses afloat, critical services available, and making sure that we were in a position for the quickest, strongest recovery in the world. And while we have a lot to feel proud of, we recognize and have had many conversations throughout this committee about the pain points that people are continuing to feel with rising costs. And you touched on this. I really appreciate the discussion around housing in an earlier question, because this is the greatest inflationary costs, especially in Colorado, where we have seen significant home price increases.
We did it, baby.
The lack of supply, people are unable to
58,000,
move
baby.
because they would go to a much
Sammy
higher
brought the
interest
sauce
rate,
again.
and then people are unable to buy because they can't afford
Let's
those
go.
mortgage payments.
Let's
And
go.
so while you've talked about
That's how it
recognizing
begins, baby. And
that
I showed you the flag before it happened.
lowering the interest rates will
Showed
actually
you we would
help
have to
with
come to the 21
addressing
and then
the
pop.
housing crisis.
That's all you need, baby.
We still have a lack of housing
we'll come back to the
supply.
21
so can you talk a
possibly.
little bit more about what's happening?
Don't get
and
too
that
excited.
the lower interest rates are only a piece of this.
It's a longer term thing, and a lot of it is
Who made gains
it's
on the
harder to
squeeze?
get lots and zoning and
3 years waiting.
materials
Shout out to
and
the people who took
workers.
profits. I like that. God bless you.
In many metropolitan areas, the near-in areas are all
Yeah, home and auto repos are
built up
soaring.
around
Our economy is not
Washington. I
looking
grew
good like
up
the Dems are saying.
near Washington, D.C., and it was countryside, just a couple of miles.
They always tell you it's good until out of
There
nowhere
was
it
no
goes bad.
Beltway when I
You know
was
what I mean?
born, but ultimately, it's just we have not enough housing, and that was true.
That's honey
before the
dripping out the
pandemic,
pot,
and
baby.
certainly,
Amen.
The pandemic
Little
did
rejection
slow
there,
down
back to
housing construction.
57, 800. We're going to be
We'll
fine.
get back to a
It's going to
more
come back to the
normal economy
21.
with
That's
lower
just something you'll
interest
see.
rates and those sorts of
That's
things.
okay.
But we're still going to have
Retest. Don't lose the two. If you lose 200, this was lackluster, and we're done.
housing shortage.
All right.
Absolutely. When
Looks
I
like
think
it may
about
actually-
the other pieces of the fallout
I may
from the global
protect. I'm going to
pandemic
protect
and
that
the
at break even
changes that we
because
saw
that
in
could
our
take a nasty
economy
dump. If
was
not, fine.
in commercial
We're
real estate.
okay, and we may get the bounce right
continue
there.
to read
right?
about regional bank failures and the risks that the commercial real estate
basically a
poses
bullish
in the long
retest right
term
there at that key zone.
for those assets being on the books for our banks.
can
What do
always just
you?
get back
What
in
is
once you
your
cover. That's what I've been
insight
learning.
on the risk that it poses for our financial stability and what we should be thinking about here in Congress?
So the commercial real estate situation, which is, it's significantly downtown office and related retail and things like that. This is something the banks have been working their way through for the last couple of years. I think it'll take more time, more years to work all the way through it. We know from the stress tests and from our own work that the large banks, they're going to be okay here. Some of the regional banks and smaller banks have what you would expect, which is high concentrations in their local community in real estate. We are aware of those. The banks are aware of it. I think the supervisors have been around those banks, making sure they have capital, they have liquidity, they have a reasonably,
We need this balance here now.
not
Big
too
deal- big
optimistic
deal to get the
assessment of how
balance.
much capital they'll need, how big the losses will be. So I think we'll be working through this, and it's
Bullish on when the 21 crosses
doesn't
through the
seem to be a
200.
systemic problem or one that threatens broader
But
financial
I don't,
stability. It does.
had we
threaten
stayed up here and
bank
went sideways, I would be in the trade,
those
you
sorts
see?
of things, but it'll be with us a while.
And
We'll
then
just
that's
keep
bearish.
working our way through it.
You break the
And
200,
the
you got to
ability
stay
to
above
continue
that.
to loan to small businesses
Yeah.
because you're being locked up. You are not going to have enough time to answer this question, but my remaining outstanding question is around the recent Chevron ruling and, how you anticipate that impacting the Fed's ability.
If you want to trade where I trade,
adjust,
shout out to
to the
Mexi.com.
needs of the
In
country
the
and
pinned
ensure
comment at the top of
financial
the video here.
stability,
Okay.
without being sued at every turn.
There's the bounce
We're just
there.
looking at all these new decisions.
I'm gonna take the bounce
so
back.
So it's early. I speak under the control of my
Right.
general counsel, who I don't want to cause him to strike me.
That's how I feel about my staff. I mean, not striking me.
No, but I mean, look, ultimately, we're already very careful at the Fed about keeping within the law. We're really committed to that value. And
that fast balance made me
this
put me right
ruling
back in
doesn't change
position
that.
up 10% like
And,
that.
I think
right?
we'll continue to
But
be
you
an
got to be able to
institution
pull the
that's
trigger on the retest. That's
strongly
what I've learned
committed to
about
the rule of
retests.
law.
They take a long
Great,
time
thank you
to get
so much. I yield back.
to really get into the
And
zone of it. And again, I can still lose.
Wisconsin, Mr. Fitzgerald is recognized.
It's a,
Chairman,
it's a
thanks for
constant
being
battle.
here. There has been a lot of talk about Basel III. Wanted to just change that subject a little bit. Long-term debt proposal, I think, should be rewritten and reproposed as well. But at the very least, the rule needs to be tailored as law requires, so that regional banks aren't treated more harshly than the largest banks, of course. In particular, the requirement for regional banks
They
to
want to
hold
consolidate.
long-term debt at both the holding company and
You're
insured
not going to get what you want out of this
depository
question, I guarantee, because I already know where we're going
seems to
in the
be
long
a
term. You
burden
see,
is what we're hearing,
these
I
little nitpicking questions don't matter.
I just wanted to mention that I would hope that there would be some flexibility for smaller regional banks to pre-position resources, because they're obviously
Any day, brother, any day.
there's some resources that are loss absorbing, I guess is the way you would consider them in the reproposal. Do you have any thoughts
Beautiful
on
bullish
kind
retest
of how
of the
this
200 I
is
made
playing
in
out
1
right
minute.
now, or what this looks like?
Solidifies
Yeah,
it.
so
with
on the
bang.
long-term debt thing, we put
Could
it
we
out
double top here? We could.
for comment. We've received quite a few comments, and staff has been analyzing them, and that's something we're well aware of the concerns that have been raised, and we're thinking carefully about how to move forward on that. The other one was pre-positioning. That's more along the lines of the discount window and the liquidity requirements, I take it. So
Right.
So we haven't made a proposal there yet. We're thinking carefully about that. I think we're trying to learn the right lessons from what happened last spring at Silicon Valley Bank and a
Lackluster,
couple
man.
other banks, and one of them just is the discount window worked, but we could certainly modernize it, make it more effective. And also, we learned, that bank runs are moving just a whole lot faster, at least in that case, and that even bank runs from 10 or 15 years ago were nothing like as fast as what happened in Silicon Valley. So we need to bake that
Oh, God.
that new learning into the liquidity requirements.
I'll
in
snatch
some
that
way
off
or
again.
other.
I don't
Again,
trust
haven't
it.
made a
You got to
proposal.
keep the
When we
movement.
do,
You see?
Of course, it'll go out.
I do this all the time.
comment.
Small, and then I bang, 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 bang,
Very
bang.
much
right?
want to learn from.
Got to get the confirmation while he's talking. I should be trading while he's talking anyway. It's pretty volatile.
There's been a clear trend of banks stepping away from the mortgage market, kind of in the face of the increased regulation. That's my interpretation, at least. Non-bank lenders have stepped in to kind of fill that void. Today, banks support the non-bank lenders in the broader housing finance system through the so-called warehouse lending for home mortgages. But I'm deeply concerned that some of the, as was mentioned by my colleagues earlier, that some of the Basel rules could harm both bank and non-bank lenders alike.
Of course.
Kind of undermining the liquidity and kind of the raising costs of home buyers. So let me just ask, in regards to Basel III, the endgame proposal, could it make housing finance less stable, I guess, is the question.
So that's certainly not the intention, and we're again
We
well
learned
aware
something
of
new.
the,
A warehouse
the
lending
concerns
mortgage.
that have been raised, and
I heard him say that, and
certainly
I'm
paying
always
careful
trying to
attention
learn.
to those.
So warehouse lending is a line of credit given to a loan originator, typically a mortgage lender, to fund mortgage loans to a borrower. The funds are used to pay for a mortgage that a borrower uses to purchase the property. The life of the loan generally extends from the origination to the time it is sold on the secondary market, either directly or through securitization. Okay, the repayment of warehouse lines of credit is used by lenders through charges on each transaction. Interesting. Warehouse lending fact sheet. Never heard of it, so you learn something new every day.
Despite the smaller issuer
Back at
exemption for the
$57,840 for Bitcoin.
debit interchange fee cap, insurers with less than $10 billion of assets reportedly lost.
Gotta keep the 200 a million here on the
35%
flag.
of inflation-adjusted interchange revenue. Have you considered the impact that further reduction of debt interchange will have on small financial institutions with less than $10 billion of assets?
Yes, so
They're
that's
gonna get
another
beat
one where
up.
we put out a
Anyone with less
proposal,
than
we got
10
a lot
billion
of
gonna get
comments,
beat,
and we're
and he
carefully
knows that.
reviewing those, and you're certainly aware of the specific concern that you raised.
As you may know, the latest Fed
He just says he's aware
514
when you tell him
proposal,
something's gonna happen.
which is
Doesn't say he's
used to
gonna
help
do anything
collect
about
data
it.
for Fed stress tests, ask banks for more detailed data on bank lending to non-banks. As a result, there's concern that the Fed may start trying to indirectly regulate non-banks and the financial risk. I just talked to one this morning that's concerned about that. So given those concerns raised about the lack of transparency in its stress testing models and the potential unintended consequences, is the Fed planning to indirectly regulate non-bank financial institutions through these tests?
That's not the idea. The idea is we see intermediation growing very quickly in non-banks. And, we don't regulate them. We don't have a secret plan to regulate them or anything like that. But the question is what risks are being kept inside the banking system, which we do regulate and supervise, and what are the relationships between these large non-banks and banks? And, we don't have a preconceived answer to that. We just want to understand what are those business relationships like, and what kind of risks does that mean the banks are running? That's all it is.
Thank you, Chairman. I yield back.
It's a descending triangle right there.
Gentlewoman from New York, Ms. Velasquez is now recognized.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here today, almost noon. Once the Fed is reassured
I know it's gonna
that
go this long.
inflation is under control,
The whole show.
what does the path back to neutral interest rates look like?
We've said that we wouldn't reduce rates until we were confident that inflation is moving sustainably down to 2%. I think the question of what is neutral is
The descending
is gonna
triangle,
be an
these usually
empirical
break to the
question.
downside 68% of the
think,
time.
It seems to me it's unlikely
Looks like you're gonna splash the
that
57,
we'll be
650.
going back to the very low
Based
interest
on just
rates
the
of
chart, but you never
pre-crisis
know.
period. But we'll know that we won't know that until we get there.
And we make the falling wedge. Can that hold?
The Fed's dual mandate comprises of price stability
goes, though.
and maximum sustainable
Descending triangle to the
employment.
downside.
As
I
the
saw
Fed
it.
is thinking about inflation
Likely
and
gonna
the
fall to
possibility of
57,650.
interest rate cuts, how are
Got
you
rejected by
balancing
58,000. You
these
needed to get back
priorities
above that.
with the need to maximize
Key,
employment?
support becomes resistance. I
Over
saw
the
a flip
past
that.
couple of years, we've had a very strong labor market and inflation well above target, and that has
You
led
needed to
us
flip that key area to be bullish, right?
focus mainly on bringing down inflation. Over the course of 2 years, inflation has come down pretty significantly.
Take about
There's
4
more work
weeks to get
do
that
there.
ID.
We're not at our
Take
target.
about
We
4
need to keep
weeks
on
for
that
me.
job. At the same time, the labor market has cooled pretty significantly. And so I would say those two goals are now much closer to being in balance, and that means from a policy standpoint, we need to be paying attention to both of them. Whereas for the last couple of years, really, we had to pay mostly attention to inflation.
Chairman Powell, I have told you that I will be asking for a status update on the Section 956 rulemaking at every future hearing. Since your last appearance in March, several of your fellow regulators have issued a proposed rule. Why did the Fed choose
We
not
knew we
to
were going
sign
right down
onto
there.
this
See?
proposal?
So what
Target
we're
right
doing
there.
is we're
68% chance,
we're
70% chance.
looking
Round
at,
it up. You're going here.
The current state of
You made a
affairs
descending
as it relates
triangle. You
to
lost the 200
incentive
SMA.
compensation.
Dump to the
As you
downside.
may know, we've We've had guidance in
See, I
place
protected
now
my
since
I got in and out of
2010,
trades, but I didn't lose.
for
I
all
protected
banks,
my money every
and
time.
we supervise
because I didn't get
pretty
my
significantly
confirmations. I
around
could see that.
So it's a
I
very
didn't- I
different
didn't let it
picture
go.
than the one that was there in 2010. So
We just
we're
showed you
asking
this
ourselves,
descending
what is
triangle.
the situation today, and how do we tailor
As you move is the base.
a proposal to address
And that's- we
the
just hit the target.
residual risk as opposed to what the situation in 2010 was?
Crazy,
Yes.
right?
In previous hearings, you said
descending triangles break to the
that
downside
you need
68%
to
of the
better
time.
understand the problem in order to write the rule. In a speech in June, SEC Commissioner Lizarraga said, and I quote, "It has been well documented that in the lead up to the financial crisis, pay structures often encourage big bets that maximized short-term profits but ignored bigger, longer-term risks that threaten to take down
Lost the
the
sauce.
entire financial system."
Bears div
Additionally,
too?
since your
Yeah,
last
totally.
appearance, several of your fellow regulators have moved toward with a proposed rule. Why have your fellow regulators and Commissioner Lizarraga been able to understand the scope of the problem and the Fed has not?
Well, I think the quote absolutely makes my point, which is, I think everyone agrees that incentive compensation practices before the global financial crisis were not in a good place. However, we published guidance on incentive compensation, binding on all, well, not binding, but guidance for all banks in 2010, after putting it out for comment. A lot of thought went into that guidance, and now we supervise on that guidance. And so
You can have such a nice
situation with
lunch when this
incentive
is over, right? You
compensation
just-
now in banks is completely different than it was before the global financial
Well,
crisis.
it's
Completely different.
Well, you know, the other regulators have been able to figure this out, and you haven't. But let me just say, this is not how congressional mandates work. Of all the rulemaking provisions in the Dodd-Frank, only 148 were mandatory. And of those, only 22 had a deadline of less than a year after enactment. Section 956 was one of them. And I hope that you come to the conclusion that it is your duty to issue the regulation. Thank you, and I yield back, Mr. Chairman.
Section 156 requires either a rule or guidance, by the way. It does not require a rule or guidance. Thank you.
The gentleman from Florida, Mr.
Oh,
Donalds, is now recognized.
snatch back.
Thank you, Mr. Chairman. Secretary Powell, it's good to see you. Let's cover a lot of different areas of ground. According to the Bureau of Economic Analysis, since President Biden took office, the price of goods has continued to outpace family incomes, with prices increasing now 19.3%, while average weekly earnings have only increased 14.6%. So families have fallen behind with respect to their purchasing power, that they're able to go and acquire goods. What role has government spending played in creating this untenable economic crisis?
Close that door, please.
Remember,
sorry,
shut
I can't hear very well when the door's open.
Yo, that was so classic. Remember, shut the door, man.
That needs to be closed. So what role is government spending as part of the story? So government spent, we had our rates really low. The pandemic happened and we closed the economy and then reopened it. And I think you saw a burst of inflation, everywhere in the world. And certainly there were many contributors to that.
Do you think that the president in his budget calling for an increase of federal spending, up to upwards of 5% increase in federal spending across the board, do you think that's going to have further implications on stubborn inflation plaguing the pocketbooks of the American people?
It would be inappropriate for me to comment on the president's budget.
The only reason why I would ask Mr. Powell is because obviously the Federal Reserve is having to respond to various aspects of fiscal policy coming from Capitol Hill. Regardless of the president's budget, would it be appropriate in the current environment for federal spending to increase 5%, 10%, 15%?
Honestly, that's a question for elected representatives. We don't play a role in fiscal policy.
Oh, fair enough. Is it the view of yourself and the Federal Reserve Board that fiscal policy does create impacts on the Fed's ability to manage monetary policy for the United States?
We take fiscal policy as a given, and we're not commentators, we're not the Congressional Budget Office or the Office of Management Budget. Whatever fiscal policy happens up here, we decline all opportunities to be commentators on it. We take it as a given, and that's because we didn't run for office. We don't have that job. We stick to our knitting. And the fact that we're independent really depends on us sticking to what our assignment is, which is to deal with, things with the economy as it is.
I would argue that the fiscal policy of the United States has given you guys a lot more to deal with.
You gotta think of what you're doing, man.
And whatever the various burdens that come with it, unfortunately, you have to deal. You have to tangle with it, but the American consumer is the one that truly has to deal with it. I'm going to move on. The monetary policy report cites a pickup.
I love you to death. I love you so much. Please don't come in the studio. Please do not come in the studio when I am live.
Remains below
Please. I know if I don't come out, don't come in.
Percentage
How's
of
that?
the increased
I love you so
foreign-born
much, baby
labor
girl. I love you so
supply,
much. If I don't
to
come
your
out, don't come in,
knowledge, comes
sweetie
from illegal
beatie.
immigration?
I love you so much. If I don't come out, don't come in, baby.
What percentage of...
Don't come in, baby. Thank you.
Say it again, the question?
What percentage of foreign-born labor comes from illegal immigration?
I think all of foreign-born labor comes from immigration.
No, illegal immigration.
Illegal.
Illegal,
Sorry,
sir.
didn't get that.
Yes, sir.
I don't know the answer to that.
All right. Well, one of the things that I think will be important to help, I guess, advise Congress on what to do going forward is if the Federal Reserve had some data to that regard to help us make further decisions into the future. Chairman Powell, let me ask you this one overarching question. Obviously, interest rates, if you compare it over the last 15 years of monetary policy, is at an elevated rate.
My wife hates my crypto.
Does the Fed anticipate
My wife's just
any possibility
very
of
pushy, man. Like
rates,
she wants what she wants when she
being
wants
lowered,
it. She doesn't
whether
really
it's
care
50
about what I'm
basis
doing.
points, 100
She
basis
doesn't.
points at some
And
point
I have to
over
put
the
up a
next
wall
year
sometimes
or
and
two?
fight for my independence.
I guess the
guys
question
see
really
it,
is where are interest rates going to settle out when all of the effects of the pandemic are really done? And no one knows. This is a great discussion to have. But I think my sense, and pretty commonly people think, we probably won't go back to that era between the global financial crisis and that
That made me
pandemic,
so
where rates
angry.
were
Well,
very,
you have to
very
deal with your
low.
anger then.
Inflation was very low.
Like, you have a problem.
And like extremely low. There were major European countries that had negative 10-year bond rates. Negative.
Sam still
That was
knows that
not the
this will
case
have an
here,
aftermath.
but I don't
yeah,
think we're going
yeah.
back to rates that are that low.
I
We
feel
think
you,
that things
Sam.
like
Fire
the
your hand
neutral
better than me.
rate
I need to
are-
take notes.
are
Thank
driven
you.
by slow-moving forces, but ultimately, you can see the effect.
Babe, when
We
it
have,
when it
you know,
crosses
our
the
policy
200,
rate
leave
is
me
over
alone,
5%
okay?
now.
Exactly.
And it feels like policy is restrictive, but not
Exactly.
intensely restrictive. So that suggests that the neutral rate of interest, at least as of
Now
now,
look, we're
will have
back in the
risen
action.
somewhat, which
About
means
to
rates will
crack the
be a little
200 again.
Okay, thank you so much. I yield back.
Thank you.
Gentleman yields back. We now go to the gentleman from California, Mr. Sherman, who is recognized for 5 minutes. Mr. Sherman? Would you like us to move on?
Whenever we close a 1 minute
If
candle
it's
back
Josh's
over the
turn,
200, I
it's
go
Josh's
at it
turn.
again.
Gentleman from New Jersey is recognized.
It pays too well
Thank you,
not
Mr.
to go at
Sherman.
it, so I go
Thank you,
at
Mr.
it over
Chairman.
and over again. You see?
Chairman Powell, you have
That
said
should
that
fire off
custody assets are off balance sheet, always have been, and do you stand by that?
Sorry, say that again?
You've said that, quote, custody assets are off balance sheet, always have been. Do you stand by that statement, sir?
I think as a general matter, yes.
The SEC's Staff Accounting Bulletin 121 affects a core banking activity, custody. The specific bulletin requires banks to put digital assets held in custody on their balance sheet, effectively keeping banks out of the market entirely. Have the Fed and the SEC had conversations about the impact of SAB 121, and just wanted to get a sense of your thoughts on the policy, please?
So as you know, I think we don't comment on the SEC's policy. They don't comment on our policy.
We lose these 200 amount.
I know
See?
that. I knew you were going to SAB 121 on that, but honestly, it's the SEC's business, not ours.
Interesting.
Thank you. Last month, you said that when evaluating inflation data, you consider whether wage growth is outpacing productivity. From 1979 to 2019, middle-class workers' productivity grew about 60%, while their wages grew by about 16%. Do you consider this historical gap when considering whether to hike rates on families obviously struggling to make ends meet?
So we
It's not his fault. He's not trying to raise families.
And we're looking at maximum
See, like,
employment. Those are our goals.
there's this
we
battle-
don't really have the ability we don't have a bunch of different tools for things like what you're talking about. So really, it's just those things. Of course, we're very well aware of longer run trends like that. You have to also include benefits, though, in that analysis, which does close that gap
You
quite
left
a bit.
out.
You just mentioned wages.
I appreciate that. Thank you.
So do the math if you're going to
Mr.
do the
Chairman,
math. You checked him
yesterday,
real
the
quick there.
Director of National Intelligence
He's getting
said that,
hungry,
quote,
man. It's time for
Iranian
lunch. He's
government
gonna get a little
actors have
sharper
sought
with his
to
words.
opportunistically
Of course.
take advantage of ongoing protests regarding the war in Gaza. End quote. They have observed actors, quote, observed actors tied to Iran's government posing as activists online, seeking to encourage protests and even providing financial support to protesters, end quote. As a member of the House Select Committee on Intelligence, I'm equally concerned about our adversaries meddling in our financial system. Can I have your commitment, or if you can discuss the work, if you're working with other federal agencies to investigate and address foreign interference channeled through our financial institutions?
So we do take part in many of those things, especially at the staff level. And as you know, there's a lot of focus in the intelligence community, and it's very helpful to the banks, the commercial
As long as we
banks,
stay above this yellow
and to
line, I'm
us.
game, you see?
We're
And I do it without
certainly
emotions.
very focused on those issues.
I can have my
We've,
stop loss pretty close,
got
too.
a strong team. Of course, you're never able to sleep
No emotions,
on
man.
cyber risk.
77x leverage, no emotion at all.
You know, we just keep.
I feel
we
nothing.
Just keep fighting it.
I feel nothing.
I would like to switch gears to the discount
I feel
window,
nothing.
please. Chairman, we've heard that the discount window is behind the times in terms of its operations. We also continue to hear that efforts to modernize the discount window and encourage its use will be ineffective without reducing the associated stigma. The usability of the discount window is an important tool for banks that need liquidity. Just wanted to get a sense of efforts underway to make the discount window a more realistic option for banks that need liquidity.
So it's a couple.
They're going to be
things.
taking
First
away
is,
liquidity, man.
We need
the
to modernize
exact
our
opposite.
infrastructure. You know,
They're going to make sure you get nothing.
discount window in our
They're going to
system
consolidate the
is
banking
not
system.
It's not a primary source.
Obvious to me
of
exactly
credit.
what's happening.
It's a source for
It's what's going to go down.
for banks that they can use under certain circumstances. So, but we know that the infrastructure is a little tired, and we're investing in that and making it more user-friendly and all that. So that's a big project that's going
Is
on.
that
Sorry, the
bounce right off
second
the
point
card?
was stigma. So stigma is that's tough. That's a tough one, and you know it amounts to. There are a lot of ways to get after that. We're studying all of them. You know,
Sloppies.
in a sense, if you require banks to use the discount window, then that can help with the stigma. I think. I mean, this is a big ask, but you know, when Congress required us
that
to
stop
publish
loss
the
wick.
names of discount window users,
go.
that
It
didn't
was
help.
like $8,
It doesn't help at
$9.
all because banks basically say we're not going to use discount window because it might, you know, people might see us as troubled, and that's not what we want. We want people to be able to freely use the discount window. So we're
So now
we've
you've
been
lost the
focused on this
200
issue
SMA,
for a
you'll get
long
an
time,
nasty duck.
Have not made a lot
See,
of progress.
that's why
on
you
it,
don't want to stay in there.
But right now, I think we're very focused on it.
Thank you, sir. I'll yield back.
Chop City right now.
Gentleman yields back. We now go to the gentleman from New York, Mr. Lawler, who is recognized for 5 minutes.
I thought they
Thank you,
ended
Mr.
this.
Chairman. Chairman Powell, to the best of my knowledge, the last public meeting between you and President Biden occurred on May 31st, 2022. Does that sound accurate?
I'm going to take your word for it.
Okay. Have you had any private meetings with the president since that time?
No,
Any phone calls with the president?
I don't believe so.
Is there any reason why you've not met with or spoken to the president?
I mean, I meet with when any president calls, you come and you meet, but that hasn't happened, so.
So in over 2 years, with inflation still nagging us, with cost out of control, President Biden has not asked to meet with you in over 2 years?
Back above the 200.
I haven't had a meeting with him. He hasn't sought a meeting, and of course, I don't seek meetings, so you have the date. I don't.
But to your knowledge, in the last 2 years, you've not spoken with or met with the president at all?
He shook his hand in a line once, but that wasn't a conversation. It was just, Mr. President, and that was it. That was at a state dinner. I attended a
The
state dinner.
funniest thing I ever heard, yo. Like,
a few months ago, and I shook his hand. Good evening, Mr. President, and that was it.
this is the funniest thing.
Does that not strike you as odd that the president has not sought to meet with you?
Not at all. Not at all. We're an
Mr.
independent
Chairman.
agency, and
Mr. Chairman, parliamentary inquiry, please, Mr. Chairman.
I'm sorry.
Am I recognized?
I want to answer your.
State your inquiry.
Thank you, Mr. Chairman. I make a point of order under Clause 4 of Rule 17 that the gentleman's words are disorderly and violate the rules of decorum in debate insofar as they are negatively reflecting upon the personality of a candidate for President of the United States.
The congressman is not engaged in any personality or in any, has questioned anything about anyone at this point. I'm not sure where you're going, Congressman. Congressman.
We have
Congressman
shut him
recognized.
down real quick.
Thank you.
Look at the
Thank
malarkey
you.
in
Happy
here.
to answer your question.
Mr. Chairman.
What a waste of time.
Thank you.
Mr. Chairman, I'd like to
Not at all
continue with the
unusual.
point of order, please.
What is your point of order?
Mr. Chairman, we have been admonished in this committee that we should not have words that negatively reflect upon persons who are running for president. This would include
The dude can't
Trump,
talk, bro.
as well as the current president.
Like, let's get real, man.
Didn't the ranking member
Like,
do
these
a
people
whole
are
opening
insane.
monologue
Chairman,
Like, the dude
diatribe
can't talk.
about some
Like, you're talking about
ridiculous
someone that can't talk on
And
camera,
out of
man.
order,
Like,
Mr. Chairman, until
get a
you-
life.
Mr. Lawler
he's
has
already
not
ruled.
admonished or said anything negative about the president at all. I just listened to his comments, so I'm going to recognize the congressman again.
cheap suit
Mr.
should be
Lawler from New
admonished.
York.
Thank you,
He's on
Mr.
seed
Chairman.
oils for
Ms. Powell,
sure.
you were trying to answer my question.
So we're an independent agency. The administration has been very respectful of the Fed and not, wanting to try to influence some things like that. And I don't find it at
Chop
all
City,
unusual.
man.
I've been at the Fed this is my 13th year, and I think there can go by long periods of time when the Fed chair doesn't meet with the president, and that's totally fine.
Okay.
7777.
Since you made mention of the independence of the Fed, and I know you pride yourself in that independence, do you acknowledge, or do members of the FOMC acknowledge that a rate cut in September could be viewed as political just 30 to 60 days before an election?
So our undertaking is to make decisions when and as they need to be made based on the data, the incoming data, the evolving outlook, and the balance of risks, and not in consideration of other factors, and that would include
That's a shoulder, a head, and a right
we
shoulder.
will make those
now. See
decisions.
that?
We have a long history of doing that, including during election years. And that is the undertaking we'll make. Anything we do will be very well grounded. And, it's just not appropriate for us to get into the business of thinking about election cycles at all, one way or the other.
So inflation year over year from May 2024 to from May 2023 to May 2024 is up 3.3%. Overall inflation. Energy inflation is up 3.7%. Food inflation up 2.1%. With inflation continuing to be a challenge, do you see a rate cut as a possibility at this moment?
So I think you're quoting the CPI numbers, which are operating at an unusually high gap to the PCE. For 25 years, the Fed has focused on personal consumption expenditures inflation, PCE inflation. And usually the gap to CPI is only 25 or 30 basis points. It's more
bigger
now.
now.
So the PCE numbers,
Without the
current
pump there,
PCE
see?
numbers are 2.6% for headline, 2.6% for core. And we've articulated for a good long period our test for being willing to consider beginning to loosen policy. And that test is that we want to be more confident that inflation is moving on a path
See that?
sustainably down to 2%.
All you do
Not at
enter right there, you're in
2%,
the money.
but on a path sustainably
Pays for all the
to 2%.
losses.
That's the test we've articulated. I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear that, but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
Yeah, I would just note, obviously, CPI, the price of goods, the price of purchasing a home, the price of a mortgage, the cost of a mortgage has been astronomical.
Could be the
In
daily
Westchester
bottom right
County,
there.
for
Likely
instance,
it
where I
is.
represent, the average
Based on the
mortgage cost
structure,
is up
that was your bullish
$1,000
div,
a
money
month.
printer, right?
Over $12,000
But you never
a
know.
year.
It's a lot of chop too, and there's
In the
resistance
time I
at
have remaining,
58,000.
quick question. In your meetings with the president, have you noticed any mental or cognitive decline?
No.
Thank you. I yield back.
Point of order.
Gentleman's time has expired. Gentleman from
Point of order,
Texas.
Mr. Chairman.
He threw it at the end
Point
just
of
to piss
order.
that guy off, right?
Yes, Mr. Chairman. The gentleman just mentioned the president's.
He knew he was going to piss. He did that just to piss that guy off.
And I believe this to be a violation of the rules with relationship to decorum, and that this goes into a personality of a president.
Gentleman's time had expired. You're recognized now for your 5 minutes, Mr. Green.
My point of order is to be made immediately after the gentleman's statement, and that's what I'm doing.
I would remind members not to engage in personalities and comments about the president.
But, Mr. Chairman, if I may, with my point of order, I demand that the gentleman's words be taken down insofar as they negatively reflect upon a candidate for President of the United States.
Yo, this is crazy. We got some juicy buttons here.
Gentleman from New York, Mr. Lawler, is recognized.
I'll happily withdraw my words, though everybody understood them.
No!
Ching. I find
Mr. Green,
his
you're
final, if I may, Mr. Chairman.
A decorum again.
His final comment was, although everybody understood them, in my opinion, that then brings us right back to where we were before
And decorum.
he made his
Well, he has the
attempt to
decorum
withdraw.
again.
Now, if he's willing to withdraw appropriately, I will not demand. But until he does so, I demand that his words be taken down.
The gentleman's time had expired.
Mr. Chairman, the time does not
Yo, this is
expire
funny.
on the request that I've made, the point of order. The time didn't expire on that.
Wow.
I recognize
Let
Mr.
the
Lawler.
record reflect, I withdraw my words.
Thank you, Mr. Chairman.
Wow.
Gentleman from Texas, Mr.
Wow,
Green, is
that's
now recognized for
crazy.
his 5 minutes.
Just to let you know,
Thank you, Mr. Chairman, and I thank the chair for appearing today.
well, at least he's going by the
I hope
law.
things
I don't
are
know.
going
I'm
well
a
with
rule of
you.
law guy,
I know
whatever.
that this
But
is a difficult time for you. And quite frankly, you've been in a difficult time for
What a
number of
bully,
years,
right?
And you've proved to be quite resilient and quite effective
Shady
at what
dude,
you
right?
do. So I thank you for what you're doing. I do want to ask you about several things, and I hope that I'll get to them. But first, there was a post-failure lessons
he
report
caved. What a chump. You guys are
after
funny,
the failure
man.
of Silicon Valley and Signature Banks.
Can you imagine hanging out with that guy?
I thought that report was pretty important. How important is that post-failure lessons report?
It's important. We wanted to learn the right lessons and make the right changes to both our rules, but also really to our supervisory practices more than anything else, and we're doing that.
More like, you know.
And is this something that you believe to be important after each incident, such as what happened with Silicon and the other bank?
Yes, I think we all have a lot to be humble about, and we try to learn from events.
Thank you. Let me go on to the next question, which has to do with the banks that are small. Let's talk about those that are less than $5 billion in total assets, yet they are subject to the special assessments of the FDIC once there is a systemic risk exception triggered. I'd like to see them exempt from that. Do you have any comments on it?
Double top
that's
here.
Really, that's either a
58,000
statutory
cannot get back
matter or
above
it's a matter of
resistance,
the FDIC's practice.
Gotta flip
so
that.
it's not something the Fed has any input into, really.
Okay. Let's do this next, please, as time runs out. Would you kindly finish your commentary? You were giving a comment on the pandemic and how the pandemic helped to generate this inflation, and you were stopped in the middle of your comment. So would you go back through that, please, so that the public at large can get a better
Why is he
understanding of what
popping?
actually happened with the pandemic and inflation?
So I'd be glad to. And I think people are now, we have a few years to look back. I think the more years that pass, the clearer we can see what was happening. But I think you look back now and you're seeing this, broadly what was happening was governments did a lot to support economic activity during the pandemic, and on the theory that, there could be really serious economic bad times ahead. Then the economy reopened, and it reopened very, very strongly. And I think in hindsight, you can see that there was just a lot of support for demand from fiscal policy, from monetary policy, and that supply was constrained. You couldn't make cars
because it itches my ear.
Supply chains were tangled up. There were shortages of so many things. So what happened was,
and
we
honestly,
got a
I have
burst
so
of
much ear pain
inflation.
today. This
The
is
United
good for me.
States got a big burst of
it will take a little break, but still run the
inflation,
stream.
more from demand than other countries did.
It's almost like
Then
a
you
day
have
off for
war
me
in
with all the energy
Ukraine,
I put out on the
which
stream.
gave a big burst of inflation, more to Europe than to us. And so you wind up with a situation where you've just got a lot of inflation. And
No idea what's for
our
lunch,
thinking,
man.
my
Lately, I haven't
thinking
been
at the
eating a
time
lot.
was, it's going to take restrictive monetary policy, and it's going to take
Had a
time for the
1.5
supply side
ribeyes.
and
I
demand
think there's a
side
leftover
distortions
ribeye. I
from
might
the
just heat that
pandemic
up
to
and have a
unwind.
ribeye for lunch.
2023 was the year when that kind of happened. So supply chains were fixed, the labor shortage was greatly alleviated, and unemployment remained very low. Inflation came down by a very large amount last year, while growth remained quite strong. So this was the year that kind of proved that thesis. Now we're in 2024, and it's a question of finishing the job on inflation.
Two
which
eggs. I'm
we're
gonna have steak and
committed
eggs.
to do, while also
That's what I'm gonna have.
keeping a strong labor market, which we're also committed to doing. And that's a balance that we have to strike in our policy. But I think we know more now about where this came from, because we can see what made it go away. And it was a combination of supply and demand, as we had kind of expected.
And two of the most significant factors were the pandemic and the war with Ukraine. Is that correct?
Yes, and it's also the fact that the pandemic summoned forth a great fiscal and monetary response, and that contributed to really strong activity and to inflation, without question.
We're going to run out of time, but I have to ask, if not but for that monetary response, I know that it's a counterfactual, but would we have possibly gone into a depression?
That's what we thought at the time.
Why is he popping
and
his
I think
mic? No one else
mainstream economists were very
man.
concerned that, we'd never
Speak offhand.
really shut the global economy down for a period and then tried to reopen it. We didn't know how long it would take or how well that would go.
Thank you, Mr. Chair.
Gentleman's time has expired. We now go to the gentleman from Oklahoma, Mr. Lucas, who's recognized for 5 minutes.
Thank you, Mr. Chairman.
Wow, this is
And thank you,
ongoing.
Chairman Powell, for testifying today. I realize that my questioning point in the hearing today, probably a lot of material has been covered, but there's nothing ever wrong with asking important questions a second or third time. You've reiterated how members of the board would like to see a revised Boswell proposal put out for public comment, and you're working through the process with FDIC and OCC. From my perspective, the FDIC is in a period of uncertainty, the current chairman announcing he'll resign to restore confidence in his agency, and the replacement is awaiting Senate confirmation hearings. And at the OCC, we have an acting comptroller who has not been yet confirmed by the Senate. At the very least, given the expected broad revisions,
here.
I hope the other agencies agree that a complete reproposal would be appropriate. So, Chairman, could you give me some indication of what the potential timeline around such a decision to repropose might look like?
It's pretty uncertain, but I'll give it a
Please.
shot. And I'll say again, that these discussions we've been having with the other two agencies have been very
Bitcoin, we started the live stream
constructive.
57.8. We're at
We want very much
57.920.
like
Let's
that
be
to
honest.
continue.
I still
Got pretty
squeaked out
good
some fun
agreement
for you
on
guys.
the
We in and out
substance
some
and
trades,
now
but
it's
there
about
really
the
hasn't
process.
been any
So,
volatility.
If
If you don't get waves, you
baseline
can't
might
surf,
be
right? You got to surf
that
the waves.
we
You need the
agree
waves to surf.
on a reproposal of some kind that gives the public a chance to see these changes and react to them and write comment letters. And so that could happen. We take us a while to write it up, and then we'd put it out for 60 days. I think that couldn't happen probably until part of the way through the fall. Then there would be, let's say, 60 days of comment, and we get the comments. We'd have to then evaluate the comments and think carefully about them. Having done that, we'd have to write up the final version, and that would take some time. So that probably puts you, my guess is it puts you well into next year. As I mentioned, these are rules that the banks are going to have to live with for a long time, and we need to get them right. It's not something we should be hurrying on. We need to take our time and get it right and make sure that we hear the comments. This is a very big piece of regulation. A lot of things will need to be changed. There are a lot of good things in there. We want to come out with a good proposal, and that's what it'll take.
To shift gears on you, Chairman, the 2024
Pretty
stress
spot on
test
about
focused
58.5,
on
man.
commercial real estate
I feel you on
risk,
that comment.
which is an area we've all been paying close attention to here on this committee. Do you agree that the results showed the financial system to be strong?
Oh,
yes, I do.
Then why would Bitcoin be so
Folks
low?
back home are always very concerned about inflation and the period we've gone through lately, not just the basic necessities that continue to explode, but the cost of doing business and all those other issues. The fact is the inflation's still running above the Fed's 2% target, and we've seen significant price increases in food and energy over recent years. As you and I have discussed before, I started out as a young farmer in 1977 in that inflationary period during the Carter years. Then when we went through Chairman Volcker's rather, shall we say, dramatic tightening of monetary policy. And I still remember paying 17% to borrow cow feed money when I was a student in college. I was well collateralized, but
Enjoy your 3-day water fast. I did one in April, man. They're not easy.
So I'm particularly sensitive, being a part of that generation, that if inflation isn't effectively dealt with, it can spiral out of control. Could you expand for a little bit more about your approach in dealing with inflation in a way that doesn't repeat the mistakes of the past? I just want to avoid the mistakes of the past.
So I think really one of the big lessons coming out of the high inflation of the 70s, which we both lived through, is that it really is on the central bank to be on the case and do the job and make sure that it is fully, well and truly done. And that really that is up to the central bank. And believe it or not, that wasn't fully accepted or that wasn't necessarily the thinking. And also the independence of central banks was much less respected back then. All the more credit to Paul Volcker for having the courage to do it. So we now, that is an internalized lesson for people in central banking these days.
There's obviously
we do understand
water in
that.
my ear, bro.
We are committed to bringing inflation
You make no
sustainably
sense.
down to 2%.
I love you, though, and I appreciate you.
One last question in my remaining seconds. You and the leadership of the Feds will be there the day before the election this fall, and you'll be there the day after the election. Still be the same people, carefully watching the Fed's responsibilities, correct?
This is my 4th presidential election at the Fed, and I can tell you, we come to work the next day and we do our jobs.
Gentleman's time has expired, and I'll
Thank
go
you.
to the gentleman from California, Mr. Sherman.
That's it, dude. Are you serious? 3 hours long? Yesterday?
Coming out of COVID, everyone said a soft landing was impossible and a recession was
this guy's
inevitable. I want to commend you and
This
the
guy's the
administration.
worst, bro.
It looks like we've
This guy
seen a
hates
soft
crypto.
landing. We've continued to have historically low unemployment rates and historically low unemployment rates for people of color.
What about the money, though?
And in the last 18 months, we've seen a 4.7-point decline in the inflation rate as measured by the Consumer Price Index. Is that the greatest decline, or I realize you may not have done the calculations, but I did the calculations. It's the greatest decline that we've seen in an 18-month period this century. Do you have any reason to disagree with that?
I hope that's true, and I'm glad you said it because it's certainly a lot. I can't validate the statement, though.
I'm sure you have a fine staff that will do the calculation, and hopefully we'll see the press release. When Secretary Yellen was here yesterday, I addressed an issue that both you and her should be concerned with. I've always opposed Operation Choke Point, where for political reasons, banks wouldn't provide or might not provide financial services. Florida and Tennessee have passed laws giving anybody who's denied a bank account or even a loan a way to claim that that was for political reasons, and it opens up the possibility that banks would be pressured by those laws to release their suspicious activity reports, which I understand are supposed to be private. And so I hope you'll work with the Secretary in making sure that the laws of Florida and Tennessee do not adversely affect our ability to deal with suspicious financial circumstances. You have a dual mandate. I think you have a third mandate that is implied. Because
I think he
the
messed up
budget
what he said. I think
deficit
it's the opposite,
poses
but he
a
didn't
great
say it right.
risk to price
He said it would be the
stability
other way, but yeah,
and
he didn't
to
know what he said. He messed
keeping
up.
unemployment low.
You guys get it? Yeah.
And you don't deal with spending, you don't deal with taxation. But in two
Finally,
ways, you
let's
dramatically
go.
affect the budget deficit.
Let's go.
Federal government is the biggest borrower in the history of the world. Interest rates affect the forthcoming budget deficit. And at times, you've turned over to the federal government up to $100 billion in profit. And so I hope that you would consider whether your first two mandates imply that you at least have to look at how your policies affect the budget deficit. I hope that you will go with republication of Basel III and insist on that. I know you're dealing with two other regulators on that. A recent assessment by PricewaterhouseCoopers showed that the original proposal would lead to higher borrowing costs for small and medium-sized businesses.
100%.
And in every
It's gonna
way,
shrink
Basel III
finances.
seemed to be slanted toward telling the banks, go and put your money on Wall Street where you just are going to have interest rate risk.
Yes.
And
Don't-
don't loan your money to local Main Street businesses because there's credit risk there.
Yeah.
And in fact, if you had a
100%.
fair system, you would mark to market all bonds, not just those that are, quote, available for sale. I hope also that as you redo Basel III, you treat energy tax credits, green energy tax credits, the same way you currently deal with low-income housing tax credits, that you keep in mind the effect on the securities industry, particularly municipal bonds, that you don't unfairly to local business say that if it's a publicly traded company, it counts only 65%, and that you look at mortgage servicing rights as an asset, and that you fully account for the private mortgage insurance. I know you give some credit for that, but frankly, a 80% loan to value and a 90% loan to value that has private mortgage insurance pretty much expose the bank to the same risk. I'll
tell
ask you
he's-
one question
he's
about
covering
the
his
debit
rich-
cards.
all his rich buddies' interests, too.
You're planning to provide only, I believe, a 0.3 cents additional charge for dealing with fraud prevention. Fraud is just skyrocketed. Would the Fed consider increasing the fraud prevention adjustment before finalizing its proposal?
And that's part of the comments that we've received on the interchange rule, and it's something that's a concern that we're aware of, and we'll take that into consideration.
I yield back.
Gentleman yields back, and now the gentleman from the great state of Missouri, Congressman Lukemeyer, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I certainly appreciate the thoughtful gentleman from
I wanted, like, I have
California
OCD, like, I
remarks
wanted to
on
finish
some of the
this. This
stuff
is
that-
just too long. Like,
I'm kind of curious how Chairman Powell, he indicated you've got a third implied duty here to actually work with the budget. I really thought that only the Congress had the ability to impact the budget. We're the ones, not even the legislative, not the executive branch, not the judicial branch. The legislative branch is the one that handles the budget. Am I mistaken on that, Mr. Chairman?
I believe that is right.
I don't think you want our job on top of what you got. One of the things that's come across my desk in the last few weeks here is some of the legislatures this last year around the country have started to pass banking laws that infringe on federal banking laws. Have you seen this? Are you aware of it? Do you have thoughts on it? Can you tell me what your thoughts may be?
Honestly, I have not seen that, and it wouldn't necessarily come across my desk. It might come across Vice Chair Barr's desk more.
Okay, well, I was just concerned because, I mean, you handle lots of banking rules and regulations, and so we don't want to have the state usurp the duties and responsibilities and the legal ability to
These are preemption issues?
Yes, preemption issues is what it's all about.
Yeah, that's a big deal for the OCC issue.
Yeah. So I was just curious if you'd run across any of that, had any
I
thoughts
haven't.
on it. Okay. One of the things I just got done coming out of a committee hearing with small business a while ago, and there was a home builder individual there, a contractor, and he was talking about the cost of regulations. Basically $1,000 increase in costs about 100,000 homes across the country not being able to be purchased because they're no longer affordable. And so it brings up the point with regards to cost of regulations. Do you fall under the Administrative Procedures Act?
Yes.
So part of that act is to determine the cost of a regulation, correct? Or the cost of compliance?
I don't actually know the answer to that, but
okay,
I know we
yeah.
follow carefully the APA.
But I mean, to me, that's a really important point from standpoint of
roll
how you
over there,
look at
see?
rules and regulations.
We had a chance to break that high, we did
The cost
not.
is not going to be
Resistance.
more than the economic benefit of what you're doing. So I mean, this has to be part of your analysis, I would think.
Certainly, we try to make our rules as efficient as possible and to get the job done.
One of the concerns we have is with, and I think the gentleman talked about the credit card situation here, Reg II. And with regards to the Chevron.
I'm going to call it there, man. This thing went way too long. I wanted to kick it the entire time, but it's just going too long. So look, I mean, this whole time you made a bear flag. This whole time, that's all you did. And yeah, you broke the 200 SMA, but you didn't break it. Well, you didn't break above the 58,000. So you have resistance now. That's a problem. And you got a measured move further to the downside, somewhere to about 56,760, right? And then you have resistance here at 58,021. So I basically, if you flip this and retested it, possible long, as long as you stay above the 200, I usually do long. I like that. It tells me that we should stay long, but we've been struggling for 20 minutes, just sideways, really doing nothing. So I'll keep you guys updated, but this is a bear flag. Measured move takes you to 56,800. If you break out of 58 and retest, then that would be the move. And then it would take you to the point of control there at 58.5 and then possibly to 59,200, right? So I know you have premium BOOKMAP. Can you see the liquidity on all the exchanges at once? Yes. Based on the daily chart, don't you think the top 54 was a liquidity? I don't know. I don't think like that. You're the best. You're the best, bro. No, thank you. You're the best. So this looks likely for a dump to the downside because you couldn't break above 58,000. Expect more downside if you can't break back above. All right. Sammy working overtime today. Everybody, I love you. I appreciate you. Let me put myself back where I go. I just got caught up into listening to that and it turned into ridiculousness. But normally the show doesn't go like that. If you're new, we go over all sorts of charts. I'm moving around. I'm bumping around. We have a lot of stuff going on. So just good analysis. Shout out to Peter. Thank you for the love, man. Sam, go give them girls lots of hugs and kisses. Thank you. God bless, brother. And so if this loses the 200 MA, I would be willing to more short, and it looks like you're going to more to the downside. Remember that 4 hour is bearish, right? Even though it tried to flip kind of bullish here. It had a double top. It tried to flip bullish. I'm still getting mixed signals on the day. I'm waiting for confirmation. If you stay above the 200 on the 1 minute, you're okay, but you got to get above 58,000. So right now you're kind of between the 200 and 58K. One of them is going to break. All right. That's going to be your confirmation for long or short. Thank you so much for that subscribing. Appreciate that. I appreciate the way you analyze how a full-time trader would speculate on a Fed meeting day. This is the worst thing that can happen. Sammy going offline. See you tomorrow. Everybody, I love you. I appreciate you, and I'll be back. And if you're in the trading group, you'll be talking to me throughout the day, and we'll be connected. So I love you all. If you want to join my trading group, there's a link right here in the pinned comment section. It's here at cryptolifer.com. Jump on in. MEXC.com and iTrust Capital, too, if you want to jump into iTrust Capital and start your retirement IRA right there with Bitcoin or gold and silver, right? Another thing is Bitcoin Nashville. The prices will go up this Friday in 2 days and 11 hours. I would get your tickets as soon as possible. I would pay in BTC, all right? Or the prices will go up in value. Get it done. I already booked my Airbnb. I booked my flights. I'm going to be there for sure unless, God willing. So I will see you there if you're there. No BS. I wouldn't tell you I did it if I didn't. So I booked my Airbnb. I booked my flight. I'm ready to rock, man. I'll see you on Broadway, baby. I'll see you on Broadway. So, yeah, there it is, man. A little bit of a bounce. We stay above the 200 SMA. Suggests that we could get this bounce. Either way, man, you lose the 200 SMA, a likely short to the downside. Stop loss above 58,000 could be the beautiful play, right? Everybody, I love you. I appreciate you. I'll see you tomorrow for another beautiful live stream. I have an earache right now that's been going on for days, and I'm just taking some hydrocortisone and all this nonsense, but hopefully everything will resolve itself in a few more days, and I'll be back to equilibrium. But I love you. I'll see you tomorrow. Stay blessed. Stay amazing. If you're in my trading group, we nailed the trades last night and hit a huge gain. I'm usually far more excited about it, doing a way better job of selling my services. But today I'm pretty out of it or whatever for my ear, man. But God bless you all. I appreciate you all, and thank you so much from the bottom of my heart. Abundance gratitude is the mode to abundance. People make fun of this stuff, but it really does work. Manifestation, abundance, high frequency, and stay around people that are positive, bro. So God bless everybody. Stay amazing. I love you. I'll see you tomorrow. Stay blessed.